All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Tuesday, October 29th, 3:45 p.m. Folks, we are starting off the Mag 6 earnings because we already had Tesla, which is part of the Mag 7. Google is starting us off with the other 6 biggest tech companies in the United States, really in the world. And it's going to be a hell of earnings that we have to cover. A lot of stuff to discuss. On top of that, we've got AMD, one of the most important names in the semiconductor ecosystem. We've got Snapchat that tends to always have a, for lack of a better word, interesting earnings. Then we've got Chipotle dealing with the McDonald's and Starbucks stuff that happened last week. We've got Visa to talk about. We've got Enovix with batteries. We also have First Solar after following up from Enphase. We have EA. We have so many companies to discuss, so much to get into. This today, to me, is the real start of tech earnings. And Google starts it off. So we got a lot to get into, a lot to discuss, and we are going to get into everything here today. We'll be around for the next 2-3 hours, and we're going to have a lot to discuss when it comes to Google. Thank you, everybody, for being here. Someone said, I hope he wears another stretched out polo. So you didn't get a stretched out polo. You did get a nice white polo, hopefully not too stretched out. I just got done recording a podcast with someone that you guys, I think, are really going to enjoy. That'll be out Thursday night, 7 p.m. I think you guys will enjoy it. It was a 30-minute podcast. Very, very cool discussion. I think you guys will enjoy. So Thursday night, that'll be out. And that's pretty much it. Let's get started. Now, I will be having someone join me here on the Google call today. And I don't want to say his name yet. I'll have that be a surprise. So he'll be joining in just a little bit. And he'll help me analyze and break down kind of what's going on with Google and what he thinks for all these other companies that we have in upcoming earnings from. Okay. Before we get into Google, I think we got to address the elephant in the room. It's an elephant that cost $73,000. And that elephant is, never mind. Wow, that's embarrassing. Okay, it's $72,787. It was $73,000 before I went live, but that just shows the volatility of Bitcoin. At one point, it was $73,664, which is only like $100 away from the all-time highs of $73,700. But we're here at 72.7. Bitcoin has been incredibly resilient today. You got the S&P 500 right here at 582, up about 0.29% on the day. Palantir, again, incredibly resilient, 44.99, teetering on that $45 range. Robinhood's been holding 28 throughout the entire day, pretty nicely, up about 0.66%. Robinhood does have earnings tomorrow, so that's going to be a big one. I'll be live at 3:30, and we'll discuss Robinhood tomorrow. BitX up about 10% on the day. Coinbase up about 1%. MicroStrategy as well, down about 1%. So why are Coinbase and MicroStrategy down when Bitcoin is up? Because they already ran for the past couple of weeks before Bitcoin kind of broke out into the 7% breakout that it's had over the past 48 hours. And so you can see them kind of taking a little bit of a break. But if Bitcoin continues to break out, I would imagine that MicroStrategy and Coinbase also do well. SoFi had a tough earnings this morning. I thought it was a pretty damn good earnings. Market didn't love it too much. 1046 right now on SoFi. You had Noto on CNBC. I thought he did a good job, down about 6.7%. At one point, it was at 970, which was the bottom for the day. So if you snag that bottom or maybe snag the $10, $10.20 range, then you're doing okay. But stock right here down about 6.7%. One thing that is interesting is the recovery on SoFi. Usually SoFi doesn't recover like this as much. And today they did recover. They were down 12%. Now they're only down 6%. And it's still, it was at $7 a couple weeks ago. So from 7 to 10.50 is not too bad for SoFi. Reddit is at all-time highs, 3.55%. I also think Reddit has earnings today, if I'm not wrong. I don't have it on my calendar here, but I'm pretty sure Reddit has earnings today. So that'll be another big one that we have to look at. And we'll dive deep into what's going on with Reddit as well. Okay, so let's do the pump or dump on Google. Let's see what you guys have to say. On Monday morning, I said I would be bullish for Google, so I'm going to stick with that. I'm not going to flip on that. I think Google is oversold. I think there's a reason why it's oversold, which is why it's oversold, but that doesn't mean it's not oversold. And I do think that as a result of that overselling, any good numbers should help. Those are my thoughts on it. And there's an easy way for me to present the bear case here, but I'm going to stick to that bull case. I don't have a position in Google, so not financially tied or really emotionally tied to this. But it would be fun to be right. I was right on Tesla. I said, I think Tesla's going to pump. I didn't say 270. If I thought it was going to 270, I would have bought some damn Tesla. I thought 225-ish. Then the sucker wants the 270. But Google, we'll see. We'll see what happens with Google. So 74% of you say pump. All right. So a decent chunk of you say pump over dump. And I think some of you guys are using kind of that core logical argument that, look, at the end of the day, Google's oversold and any good number should help it go up, especially because it's trading at the lowest forward PE ratio or PE earnings of PE ratio is 21 times forward earnings of the Mag 7. But I think there's a couple problems. So let's talk about the bear case on Google. Google right here up 2%. I don't like that it's up 2% before earnings because you kind of don't like the run up into earnings. You kind of like it chilling out, especially on the day of. But maybe that'll good. Maybe that'll be good. Maybe that'll be bad. The bear case for Google is very simple. People are afraid that search engines like Perplexity that aren't really search engines, but they're AI engines are going to take away Google's lunch. And unfortunately, I think they have a point on that argument. But Sundar, who's the CEO of Google, should have answered this argument a long time ago. And because the lack of clarity that has been presented on this issue is not apparent to the marketplace outside of the DOJ stuff, which is another reason, but that Google really can't control the DOJ stuff. They can definitely control this Perplexity is going to kill us narrative. I think today is when they have to take control of that. And the best way to take control of that is to not show 30% cloud growth, which is what they're going to do, to not show YouTube growth, which will be okay, to not show Android growth, which will be fine, but to show search ad growth. Now, that search ad business is 85% of the revenues. It's probably going to be lower than the past couple quarters. However, if it can slightly beat against expectations, like I don't know the exact numbers, but I think the street's expecting 12% growth. If they come in at 14%, 2% is not a lot, but still on the size that you're working on when it comes to Google, when you're talking about, I think $45 billion a quarter they do on this stuff, then that matters. That matters a lot. So I think they could shut up a lot of people by just saying, hey guys, you think ChatGPT is going to kill us? It's not. Here's how. And then on the call, they can just say, even if people don't click on 10 blue links, we have another way to monetize. It's these generative AI overviews that sit at the top of your search query. And we are finding ways to incorporate in our beta testing different sponsors or different advertisements in those generative AI overviews. The problem, I think the bigger problem with Google, which is why I haven't bought the stock even at these multiples, is I'm not using it anymore. And I'm not using Gemini either. So if I'm not using it personally and it's a consumer product, you would imagine that you want to see more consumers using the AI version of whatever they're putting out. And I just don't think we're seeing widespread adoption of it, at least right now. And because of that, that's kind of the issue we're having right now with Google. And ultimately, we're going to have to see kind of how Google plays out and what we get on these earnings. Masood says YouTube revenue will beat expectations. The amount of ads have doubled both in amount and length sidewise. I'm bullish. So I think YouTube, again, can beat expectations. Is that the story of the stock, though? YouTube has never been the story of Google. It's always been the search business in and of itself, especially because they're not transparent on how much money they actually make on YouTube. But look, it's a good comparison against Netflix. By the way, YouTube's testing out a new homepage where they take away the views underneath the video. So like if my video pops up, it won't say 5,000 views. It'll just be like the title, which is kind of the Netflix route. I don't like that. I'm curious if you guys like that. Maybe they're thinking, hey, this might increase clicks, and as a result, people are like more incentivized to click on creators even if they don't see the view count. But I think the view count matters uniquely on the internet. Like that's part of the culture of like engaging with YouTube. So they're trying different things here and there. There's definitely AI incorporated into YouTube, but I don't know if that's going to be the entire full story. Could Google be flat? Yeah, I think Google could be flat as well. I think that's an argument. And honestly, being flat would not be the worst thing in the world. It's better than being down. So that is one thing that we could also see that's happening as well. Sachin says everyone is using Google, man. I don't disagree with you. It's not about people not using Google. Again, 8.5 billion search queries a day. It's not that there's not usage. It's not that there won't be amazing, mind-blowing numbers that we're about to see on Google. It's the perceived future growth of if that will continue. And that's the fundamental question that I think investors have right now on Google. The market is expecting $86.3 billion of revenue. Again, just insane to even say that. And $1.84 of EPS. So Google's got to beat those two top line numbers to kind of get some more momentum. And if not, then, we might not get a stock that moves up. Are we going to have Technical Tuesday today? Not today. Probably not this week because we have earnings. So pretty much every single day. So not this week, but next week we'll probably be back to Technical Tuesday. Just watched the interview with Gali. Great content. Awesome. I'm happy you enjoyed it. That was a fun interview. And we talked Airbnb, Robinhood. You guys saw the secret stock I pitched at the end that if you guys are OGs of the channel, you know what it is. I'm not going to say it, but you guys know what it is. And Gali got a kick out of it. He got a kick out of it. Has growth slowed yet? Not really. That's correct, Austin. You're right. Growth has not slowed down for Google yet. The key question is yet. And again, this is not me in deploying any bias against if Google's good or bad. This is just what the market has priced Google at. The yet part of that sentence is exactly what the market's afraid about. I personally think that because it's not slowed down yet, and it might not slow down at least for the next year, market's going to buy up Google. If the market doesn't feel confident that it's not going to not slow down, then I don't think they're going to buy up Google. So this is going to be one of the most important things most important earnings for Google, because I don't think it's ever had this like cloud hanging over it, over the share price literally being dead money, while the S&P has gone up, I think 4 or 5% in the past 2 months, while Google has been flat, simply because of the fact that investors are afraid about this search question on Google. Google right here, 171 up 1.7%. Where are the Mag 7s? You've got Apple at 233, Microsoft at 432, Meta, look at that, Meta 593. If Snapchat crushes it, Meta might crush it as well. So that's one thing to look out, or the stock of Meta might just go up in general if Snapchat goes up. Amazon 190, Nvidia 141, Tesla's down 1% on the day. Again, Tesla's had a good run, so that one's taking a breather. And then Google right here, 171. So all of the Mag 7 pumping instead of Tesla today. Entire market kind of having a good day. Where's the Qs? Whoa, the Nasdaq's at 500. Nasdaq at 500. That is pretty damn incredible. Look at that. Nasdaq is at 500. Chamu says, admit any reason you're not using Robinhood Legend live on the chat. So if you guys want to see me use it, I did a stream with Arnie 2 weeks ago when they had the event. And for literally 2 hours, we played with it because I got early access. And you can just go to my lives on YouTube and check it out. I'm not using it on the homepage because, guys, it's not built for streaming. It's just that simple. And I'm going to submit feedback to them, but it's just not. You guys will barely be able to see the tickers because it's like everything's so small. So Webull right now is still undisputed when it comes to presenting stocks on a chart, even if it's not the best for actually charting. But yeah, it's you guys, it's just not going to be an enjoyable experience actually trying to like see the stuff that I'm trying to show. But I did play with it. So if you guys want to see what it looks like, you can go on my YouTube live from 2 weeks ago and see that stream. Speaking of Robinhood, real quick, I found this on Wall Street Bets this morning. You know how they're getting rid of the 1% deposit boost that we talked about this morning? And I said it could be interpreted as bullish because they're getting so much organic deposits. They don't need to pay 1%. Like, it's just an expense that they don't need to have. This dude transferred $10 million from Vanguard, Fidelity, Chase, and E-Trade into Robinhood. Now, if you know anything about people that have the bulk of their net worth in those 4 platforms I mentioned, you know that they think very poorly of Robinhood. They think of Robinhood as a kiddie app that's like not worth their money. Apparently $200,000 sounds like it's worth your money. So he got a $200,000 bonus, 2% on his $10 million, and he brought that money over to Robinhood. What does that mean? Well, number one, I think deposits are going to be pretty strong in Q4. Yes, they are paying a high CAC, but the LTV on these accounts is massive. These accounts are probably going to deposit more money, use margin, be upsold into new products, trade more options, or invest for the long term and let their assets just mature on their platform, which will increase assets under custody for Robinhood. So we are seeing a lot more deposit growth, and we're seeing a lot more big accounts actually come over to Robinhood as well. Okay. We have 2 minutes left until the market closes. All eyes will be on Google. So Jason was going to join me on the stream. I don't know why he's not here. Jason from Technical Tuesday. I guess he got caught up. But I sent him the link, so maybe he'll join in a little bit. But yeah, if he joins, then he'll give me his thoughts on Google as well. He's not the most bullish on Google, but we got 2 minutes to see what these results look like. QQQ at 499. Where is Palantir? 44.98. Robinhood right here at 27.97. S&P at 581. Again, Bitcoin 72,825. BitX up 9.78% of the day, 36.15. Snapchat also trying to break $11, up 2%. SoFi right here down 6%. Again, I'm pretty proud of SoFi's recovery. Usually it doesn't recover like this. It just keeps going down on an earnings day. I mean, you had people step in and buy it at $9.70, $10 because they thought that it was stupid after the earnings they put up. So you got SoFi right here at 10.50. Enovix is down 7% before earnings. Looked like someone leaked the earnings around Enovix, and that's why it might be down. Amit, when is Robinhood releasing futures? I'm not sure. I think probably by November. Legend is rolling out. The election betting is rolling out, so they're rolling out way faster than the credit card. Most likely, I feel like by the end of November, futures should be out, if not by the end of the year. So that product already, I think, has been tested internally with their employees at the summit. They were talking about a lot of employees using it. So I feel like the product's ready. Now it's just a question of rolling it out. And it looks like they should be doing that over the next couple months. All right, we got 13 seconds. I don't own any Google, but I can't tell you how anxious I am to see what the heck happens with this one. This is going to be a very, very important stock to get started with big tech earnings. Here we go, folks. It's 4 p.m. October 29th. We're done with August. The stock market is now closed. All right, I'm going to close the poll. 66% say pump. I will leave it open for like another minute. You guys can vote. 66% say pump, 34% say dump. Let's see if that holds over the next minute. Google numbers, usually Google's very quick, so I would imagine they're going to be out probably in like a minute. It should be out pretty soon. and we'll see. And then we got AMD and all that other good stuff that we have to look at when it comes to Google. In fact, let me make the watch list real quick. So today is what? Earnings 10/29. So let me know, tickers, if I'm missing any. We have Googs, obviously. Then we've got AMD. Then we've got Snapchat. We've got Chipotle. We've got Enovix, EA. I'm probably missing some others, but those are the main ones. Oh, Visa. Visa's the other one. We got Visa to look at. All right, Google. All right, closing the poll. 870 of you voted. Most of you say pump versus dump. Here is Google up 0.21%. Again, results on Google usually happen pretty quickly. We don't have to wait too much for Google. So I think we should be getting them pretty soon. We also have First Solar that we have to look at when it comes to Google. Do we have it yet? Nope, we don't have anything yet. First Solar, yes, FSLR. Let's do those guys. No result. Electronic Arts down about 2%. No, that's flat. Yeah, we got nothing. We got nothing. Pretty much everything is in a wait and see. Got 2 minutes left. Oh boy, these are the moments we live for. These are the moments we live for. Reddit, and I know, yeah, we have Enovix. I'll put Reddit there. Reddit as well, which was up 3% on the day. These are the moments, folks. Put in the chat if you own Google. I forgot to ask that. Put in the chat if you own Google. And if you're heavy in Google, let me know that as well. I've got the investors relations pulled up. No results yet for Google. No results for AMD. No results for Snapchat. Nothing there. Nothing there. Still waiting. Let's pull up CNBC as well in case they get it. Okay, a decent amount. 52,000 Google shares. Oh boy. Oh, we're up. We're up. We are up. We are up. 4 percentage points higher on Google. Oh boy. Let's see if that holds or if that's fake. We are up right now on Google. Look at that. Look at that green candle. We touched 178. Now 176. Green, 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 green on Google. Let's see if we can get these top line numbers. What do we got going on? Let's see. We got some green. At least the immediate reaction is not the algo selling it off. At least not at the moment. 4.7%. Look at that. 179. 179 on the Googs. 179 for Google. AMD is 169. Where's AMD? AMD's up about 2% right now. Okay, not a crazy move, but it is up 2%. Google, again, 5% on a Mag 7 company is a lot. It's not as much. I mean, kind of, you could argue it's kind of almost like a couple of percentage points on an index. Like it is a decent amount of money that's moving back and forth. So Google right here, 4.6%. Reddit's up 1.2%. Enovix now is up 8%. Enovix was down 7%. And now it's up 8%, which means if you shorted Enovix in the morning and then bought calls right before the close, you probably had a really good day just off Enovix. Snapchat's up 9%. Classic Snapchat, 1180 right now. Snapchat's doing okay. Let's add Meta to this list just to see the impact on Meta, because Google also probably affects Meta. Meta is up 0.5 percentage point after hours. Google now up 3%. Okay, I'm trying to get the numbers up. Someone got it. Bhaskar, thank you for this. 212 EPS. Wow. That's a decent beat. That is a 28-cent beat. That's not easy to do on a $2 trillion company. Revenue is a $2 billion beat. If I'm not reading that wrong, revenue. Yeah, 288 versus 86. 88 versus 86 on Google. Look at that. You got the street decently excited for this, at least to an extent. Again, you know, I don't think we can expect 7 or 10% moves out of Google, especially with all the stuff that's clouding them. But at 21 times forward earnings, you would guess that the street's going to buy it up if there's some numbers that are good. And a beat on the top and the bottom line is very good. Okay, let me see if I can get their actual numbers right here. Let me go to Google IR. AMD, I'm pulling up AMD in a second as well. AMD numbers, do we have them? We don't have AMD yet. AMD is moving without numbers. Yeah, AMD, no one has the numbers yet. Let me pull up Alphabet's investor updates. By the way, Sundar talks in, I think, 25 minutes, so we'll see what he has to say. All right, here we go. Here's the earning release for Google. So let's go through this, and then we'll keep going from there. Is Google going down? Is it going down? Where's Google? Okay, it's still green. Let me know if it goes red, but it's still green. Snapchat's up 5%. AMD is up 1%. Reddit's flat. First Solar's down 6%. Same thing as Enphase. Visa's up about 0.5%. And then Enovix is up 10%. So Enovix right now is leading the way on earnings. Okay, here we go. By the way, nice of him to join. He missed all the fun on the initial pump.
What's
Jason,
up, man?
the company just reported earnings, bro. Come on.
Who did? Oh, shoot.
Did you not know they were reporting today?
Oh my God. I absolutely knew, but like I do this earnings system. So like I went through dude, I just went through like 170 companies right now. so to be honest, like yes, but wasn't really that big of a deal.
Okay, let me read off these results and then I'll get your raw reaction.
This too. Dang.
Yeah, I'll get your raw reaction after I read them up. All right, so here we go. Q3 revenue is 15% increase year over year, 88.3 billion. That's exactly a $2 billion beat on revenue. Services revenue increased 13% to 76.5 billion, led by strength across Google search and subscriptions. Cloud, 35%. The street thought that would be 30%, 11.4 billion. That's a hell of a beat on GCP, which is not bad at all for Google. Total operating income increased 34%. Operating margin percent expanded by 4.5 percentage points. Guys, if Amazon ever increased their operating margin by 4.5 percentage points, Amazon might be 300 by now. Goodness gracious. Sundar Pichai says, the momentum across the company is extraordinary. Our commitment to innovation as well as our long-term focus and investment in AI are paying off with consumers and partners benefiting from our AI tools. In search, our new AI features are expanding what people can search for and how they search it. In cloud, our AI solutions are helping drive deeper product adoption with existing customers, attract new customers, and win larger deals. And YouTube's total ads and subscription revenues surpassed 50 billion over the past 4 quarters for the first time. It's pretty incredible. That's more than 12 billion a quarter across subscriptions and ads. We generated strong revenue growth in the quarter, and our ongoing efforts to improve efficiency and help deliver improved margins. I'm looking forward to driving more advances for consumers, customers, and creators globally. Jason, raw reaction. What do you think?
What was that? I like the YouTube stuff. What was the YouTube revenue last time?
I think it was like 9 billion, a little bit less than 9 billion.
Oh man.
I'll try to get the consolidated numbers, but if that's closer to 12 billion, that's a hell of a beat.
What time does their call start?
No, YouTube is still 8.89 billion. Okay, so YouTube is a little bit lower than 9. Call starts in like 20 minutes.
And then GCP, what was the comps on that?
10.8 billion. That's a beat of 35% year over year.
35% year over year. That's actually good. So GCP was always kind of like the flyer for me on Google. I love Google. When I used to sell this stuff, like GCP was always kind of like the under the radar. They actually, is that Reddit?
That's Reddit. Reddit's up 7%, folks. Holy crap.
Nice.
Goodness gracious. AMD, guys, the numbers, I don't see them, but the stock's barely moving. I'll try to get the numbers, but I don't see them yet. The numbers not moving right now. But Google, I mean, these are not bad numbers. These are pretty incredible, actually.
Yeah, the numbers are good. The reaction is muted right now, pretty muted. So we'll see what this looks like in the morning. I think a lot of it's going to come down to how the market digests this, especially once the call starts. I mean, they don't have. It was the old CFO, the new
Ruth.
CFO.
They don't have Ruth. Yeah.
Yeah. So hopefully that's good for Google. It was a 6%. I believe a 6% implied move, which was actually like exactly what they normally move. So it's like 50 cents or it was absolutely appropriately priced.
Yeah, let's look at Enovix. So by the way, guys, Google advertising revenue at 9 billion. I'm assuming subscriptions was the other 3 billion. That's how they get to the 50 billion TTM on advertising on YouTube in general. So that's premium subscriptions and advertising gets you closer to 12 billion. So Enovix is up 25%. This is a company that does battery technology. For those that don't know, ENVX right here up 27%. Let me see if I can get their exact numbers. AMD still not out. And then we'll take a look at Snapchat. All right, Enovix, 4.3 million in revenue, which is not bad. Again, you're betting on the potential for this company more than anything. Cost margins seem to be up. Cost efficiency is good. They're looking at the leaner cash burn, stretching their financial runway into 2026. They're moving operations into Malaysia, doubling down on high demand sectors like smartphones and AR and VR, which makes sense. They signed a big deal with a Silicon Valley tech company they announced 2 months ago around AR, VR. Most people think it's Apple. It might be Meta. And they are still not profitable, but they have about $200 million in cash reserves, which is not bad. Q4 guidance, about 8 to 10 million in revenue for Enovix, up about 20% right now.
We got so many companies out right now. This is insane.
We got a lot. Reddit, though, dude. Reddit
for sure. Caesars is out. EA is supposed to go too. They had some funky stuff.
Yeah, Reddit right here up 15% also is not bad. Let me get the CNBC clip on Google real quick, guys, and then we'll move on into the other ones. And let's see what else we got.
Let me give you the top and bottom line numbers. Revenue beating estimates. Q3 revenue coming in at $88.27 billion versus $86.3. A beat there, also a beat on the bottom line. Third quarter EPS coming in at $2.12. The market was looking for $1.85. We will dig into some of the other line items, including cloud, including search revenue, and we'll bring you those as soon as we have them shortly, Morgan.
All right. Paul, the fact that we're seeing shares of Alphabet right now bounce about 3.5%, expectations do seem to, and I realize that the stock had bounced a little bit here in regular trading session, but expectations have come down since the last earnings report. So the reaction we're seeing right now, are you surprised?
Not particularly. So I mean, the general consensus has been that its search business is practically dying. The feds are going to break it up over its antitrust activity, and and YouTube was going to be weak. That's what everybody was fearful for.
And pretty much none of that happened this quarter. Pretty much none of that happened this quarter. Let's look at Reddit real quick, then we'll go back to Google. Reddit DAUs increased 47%. 97 million people use it every single day. Strong revenue growth of 68%. Holy shit, dude. That is a hell of a number. 70% revenue growth, 348 million.
Like, what are they even selling though? I mean, like that's what blows my mind on this one.
Reddit sells ads.
I mean, that's it, right? Like,
dude, I'm so mad I missed Reddit. When it IPO'd, I didn't fully get it, but the valuation was dumb. Look at this. They're not profitable. That's why it's up 20%.
Right. So they have not been public for, I think, less than 6 months still, right?
Yeah.
Usually what you'll see is a 6-month lockup period. And once that comes out, so for me on IPOs, if I'm not in it on the real one, I'll monitor it, but it's a 6-month mark that most of the lockups are gone, and I can start to feel comfortable knowing where something's going to base out.
Yeah, and it makes a lot of sense. And now if you're a VC that has been stuck in Reddit for a couple of years, you see these results, you see they're profitable, you see the market cap is only 13 billion, doing about 1.2 billion in revenue. Yeah, it's a little expensive, but if rates come down, I mean, it begs the question, is this some time to get out,
Yeah.
So we're seeing some decent revenue here. Net income, again, 30 million. So they are now profitable. Adjusted EBITDA, 94 million. Cash flow, 71 million. Free cash flow, 70 million. That top line number, though, I mean, so we're going to have to figure out, I'll probably listen to the call later, but is that 68% revenue growth coming from Google and Microsoft paying for their data, or is it coming from actual ads? And I kind of think it's more about data than ads, because, data is probably more valuable than advertising itself. But that is what we're going to have to see when it comes to Reddit. Okay. What do you say?
You stop sharing your screen. Oh, there
it is. Visa. Let's look at Visa results. Do you own Visa at all?
No, I do not. I somehow, I mean, there were so many, and I was stuck in traffic. Do you see my post? I was like 11 in Pacific, and I'm like, there's like crazy traffic right now. So I was rushing to get here, and I had to run and do all my stuff. So I missed the analysis on Visa for sure.
Well, I had no analysis on Visa, so you didn't miss anything.
Well, my analysis is all option analysis, but anyways.
So Visa right here, 265 EPS versus 257. That's a beat. Adjusted EPS 271. Net revenue 9.6 billion. Total Visa processed transactions 61 billion. I mean, these are not horrible numbers. Visa stock, I think, is up like 20% this year, so it's been a good year for them already. Year to date, up 9%, not 20%. Up another 1.7% right now. You got a divvy of about 1% on Visa. Steady grower, company that's not going anywhere. Same thing with MasterCard. So they just have to put up decent numbers. And when I listen to their call, the biggest thing I'm concerned about is what they're saying about the consumer. From what I'm seeing across earnings, and I think you're seeing this as well, Jason, it looks like the consumer is not in a horrible spot.
No, yeah. So it's actually kind of like, I don't want to say election trade, but like you want to be long the consumer if you're a Trumper, I guess, if you call it that. But definitely, long consumer in general. Regardless actually who wins, I like that trade in general. That's where I am, man.
We got Chipotle. Chipotle beat on EPS by 3 cents. I think you have some Chipotle, right?
I do, but I did so tell me. So where's Chipotle trading right now? I am interested to hear that.
Chipotle's down 8%, $55.
I think that it rebounded already, and then it's pulling back a little bit. I think this rebounds. Actually, what's the numbers on it?
So EPS, they beat slightly by 3 cents, 28 versus 25. Revenue 2.79. The street wanted 2.8. Again, we are seeing so many companies beat on EPS, maybe because they're buying back their stock, but miss slightly on revenue.
So this is interesting too. I don't know if you've noticed this, but like, I mean, we're very bullish market in general. And for the most part, a lot of the companies that have been beating have been rewarded pretty well.
Yes.
More so than the ones that, like, if you miss, you're getting hit still, but not historically, not, you would have gotten hit a lot harder. So that knowing that Chipotle wasn't like horrible, makes me think maybe this is one that gets bought up in the morning. Look at that AMD coming out right now.
We got AMD. So folks, I'm trying to find AMD's numbers. Until AMD, let's take a look at Snapchat, and then
Price doesn't look good.
Yeah, AMD is down 3% right now. All right, here's Snapchat. We'll pull up AMD in a second.
Third quarter results beating expectations from the top and bottom line, reporting 8 cents in earnings per share, 3 cents ahead of estimates. Revenue of 1.37 billion, just a hair ahead of estimates of 1.36 billion. Global daily active users of 443 million was 2 million ahead of estimates, and average revenue per user of $2.10, a penny better than expected. But we see shares are down about 2.5% in after hours trading, and that might be on the guidance here. The company guiding to fourth quarter revenue between 1.51 and 1.56 billion dollars. That's mostly below the analyst consensus estimate of 1.56 billion. Fourth quarter adjusted EBITDA guidance, though, the outlook is ahead of.
And Snap is still not profitable, which is another problem with Snapchat.
It's just reversed to 10 to 9% here, 8-9% up.
So you got the market finding different pockets of things they like.
Yeah,
right.
I mean, hey, look, if Snap was one where, you know, if it was going to get crushed, it would go back to what, $8, something like that.
Yep.
But if they really like this, what's the high on this? Like 16, something like that.
That's usually where it bottoms or tops out. AMD 92 cents of EPS. That's in line with expectations. Revenue 6.8 versus 6.7. So they beat on the top and the bottom, but something in these numbers. Let me pull up the actual numbers. Are getting the street upset. AMD now is down, what, 4%?
Yeah, so this is what I was talking about. So just as a side, AMD might look bad right now, down 5% on average. AMD's average move is actually 7%. So if they did miss, and this is the result, that's not that bad historically speaking. Because like a bad quarter, this could be down 10% easily. But again, average move 7%, and this miss sitting here at 4.25. So far, not the worst.
Yeah, I remember Q4 2023. They took a nasty dive. So you're right. They usually do sell off. Management said we have insatiable demand for more compute. Let me get Lisa Su's actual quotes. Let's see what she has to say. But AMD is one of the, again, they have that
my words too. If like in an hour or by the end of your stream, it's down 10%
on AMD.
Yeah.
I mean, where's Google? Are we still holding up on Google, guys? Google's still up 3.4. It's like the market's like interested, but the market's not overly interested, but the market's not overly upset at Google.
Yeah, man. I knew I had this feeling I could do one of my calendar spreads on Google and bank, but should have done it. Oh, well.
Let's get
that is a very undersized move underwhelmed move on Google, definitively. So the street is not, the market so far is not really that impressed. So we're gonna have to wait for the call.
And that is affecting NVIDIA, I think. NVIDIA right here is now 140.3, down about 0.5% because of this. Let's take a look at First Solar.
% right now. First Solar earnings are out. Pippa Stevens has those numbers.
Hey, Morgan, the stock is down here some 8.5% on a disappointing quarter. EPS coming in at $2.91. That missed by 23 cents. Revenues at $888 million. That was short of the $1.08 billion that analysts were looking for. The company lowered its full year revenue guidance, also lowered its full year EPS guidance. Now, they did say they're navigating against a backdrop of industry volatility and political uncertainty before saying that they can, work through the outcome of the upcoming U.S. elections. Still, though, the stock here down 6%. Morgan?
Pippa Stevens, thank you. We have AMD results as well. Our team is going through those. We'll bring you them.
All right. So First Solar kind of having the same fate as Enphase. Any thoughts on these solar plays, Jason?
Yeah, so I feel like the market's putting them into the election bucket right now. So if you don't know, like as an options trader, and earnings season is like my playoffs. Sometimes where like I go through literally every company, but this is one where I could see there was a lot of option interest here, but it was all focused around the election. So I can tell you definitively that the market is maybe not so preoccupied with the earnings report, even though it does say it's like down 6%. This is one where like it could get bought up tomorrow or at any point if the Dems start to look like they have an edge.
Cheesecake had earnings apparently. I didn't know that. Let's take a look at. What do you say?
That's a great long-term chart. If you didn't know.
No, 100%.
Do you like Cheesecake Factory?
Oh, I love Cheesecake Factory.
Oh man,
it's the best place for a first date, dude. It's the best place.
No, I thought Applebee's wasn't there?
No, Applebee's is too cheap for a first date.
It's fancy like Applebee's, man.
Too cheap for a first
fancy
date.
like Applebee's.
Okay, not Chipotle. Cheesecake Factory, 865 million of revenue, pre-tax net income of 2.5 million. CEO says the third quarter was our fourth consecutive quarter of year-over-year top and bottom line growth, reflecting our strong operational execution and benefits of our scale. We are capturing market share as evidenced by the continued strong outperformance in comparable sales at the traffic of the Cheesecake Factory restaurants versus the broader casual dining industry. We opened 4 new restaurants during the third quarter, and subsequent to quarter end, opened 3 additional restaurants for a total of 17 new openings year to date. Looking forward, we remain focused on operational excellence, growing profitability, and creating long-term sustainable value into 2025. Stock's up 4%. Market likes it. It's nice to see that. I mean, if Cheesecake Factory feels that they're on the right path, that means people can afford to go out and spend $70 to $80 on a meal, which is good for the broader consumer not being in a horrible position. All right, let's get AMD, and then we'll keep going from there.
92 cents a share, revenue at 6.82 billion. The street was looking for 6.7 billion. We do have comments here from CEO Lisa Su. She talks about how they delivered strong third quarter results, led by higher sales of its EPYC and Instinct data center products and robust demand for Ryzen PC processors. We'll look for some numbers on the earnings call, which begins later this hour. She did say that we are seeing significant growth opportunities across our data center, client, and embedded businesses. I would point out a breakdown of revenues here for the third quarter. Data center revenue of 3.5 billion. The estimate was for 3.48, and gross margins of 54%, 53.4%, also above, but we are watching shares down by around 6%. One thing I would point out is its revenue expectations for the fourth quarter of 7.5 billion. That is in line with estimates. Some analysts I know were hoping for a beat there. Morgan?
All right, Seema, thank you. Shares down 6.5% right now. Don't miss an exclusive interview.
All right. We got Google in 7 minutes, but this is the earnings season, folks, for today. Enovix up 20%, Snapchat up 6%.
What happened to Qualcomm just now? Do you know?
Did they have earnings?
No, they did not, but it's down a couple points in the after hours. I don't know.
That is AMD's fault. I think that's AMD's fault. Let's go to all the semis. How are the semis doing? So, yeah, look at this, dude. Everything's red after hours. Look at SMCI's down 1%. Intel's down 1%. Wow. Qualcomm's down 2%. Broadcom's down 1%. Dell's down. Micron's down. ARM is down. Lam is down. AMD really...
You're watching Lam now?
No, I'm not watching it too much. It's on the list, but you had a good call out. They had a good earnings. You told us about it on Tuesday, and Wednesday wasn't too bad.
Yeah. Also told us about the Ethereum move next. See that one? That one's good so far.
Okay, let's do a quick minute on Bitcoin. I mean,
oh my goodness, I thought we were skipping that.
I mean, just like, what do you think? Is it bullish right here, or you kind of think it's fake?
Bullish here. I think here's what I think. I think that we're gonna have another little press towards the back half of the week, and then we might see some profit taking over the weekend. But overall, I'm just not worried about it. Does that make sense? Like I'm happy with Bitcoin. It's not even my focus. That's how sure I am about it. So I'm like, it can do what it does. And I think I said, recently, it's just kind of like a matter of time for me. So let it do its thing. It's going to look choppy. It's going to get wild. But this is what happens when the market starts to build, and you're going to start seeing more market participants jump into that sector, the crypto sector, if you will. and people start trading around it. So that's when we're going to start to see some more wild movement that we haven't seen in a while. So that's what I expect out of the crypto space in general. So maybe one more press and then a bit of a pullback over the weekend. Just my gut. I'm not reading a crystal ball, but I do have someone that does that. But yeah, that's my gut right now in general.
Why? As I think that's fair, and I think a lot of people share that view. Why do you think Amazon's up 1% after hours? Do you think it's because of Google?
Probably. So if GCP is up 30%, did you say 30%?
35.
That's massive, right?
That's huge, bro.
That's massive for Google. They don't get a lot of credit for GCP, but if GCP is up 35%, I think I don't know, but I would hope that they're actually finally able to take a little bit of market share. But the immediate market read-through is going to be that's going to be what's Microsoft. That would actually be a read-through to Microsoft Azure and Amazon.
Yeah, this is pretty incredible. Going back, guys, into Google's.
Yeah, look at Microsoft and look at Amazon. So yeah, I think that's the immediate read-through for GCP. Being up that much, that's a large percentage, and this is where I would probably caution it. It's like GCP is very small footprint. It has a very, very small footprint comparatively to Azure and AWS, but so they had a lot more room to grow. But even if Azure and AWS are like 10%, that's a lot of dollars. That's a lot of dollars.
That is a lot, and if Google's growing at 35%, if freaking Amazon can get even to 21%. I think they're at 19% right now. Amazon's on top.
19.
Yeah, 19% trailing 12 months on Amazon.
Yeah, and I think if Azure and AWS are actually also up 30%, and then GCP is up 30%, that's a read through I'll be looking for later. To be like, hey, maybe they're still having a lot of struggles, because GCP should, in this environment, they should be really hungry, and they should be going after the market like aggressively. And so if they're not able to take some market share here in this environment, it's a little concerning. But yeah, 8 billion net income run rate. Yeah, GCP is the deal. It's a big deal.
It's a very big deal. We got the call, folks, in about 3 minutes on Google. Snapchat's now coming down a little bit. It was up 10%. Now it's up 3%. A couple other.
We need a big move on Snap.
Yeah, there's always call buyers on Snap hoping for like a 15% pump, and they sell it right before it goes down 40%. Let's look at EA and Caesars. Those are two more that we got today.
Waller Street was looking for 2.04 billion. EPS came in at $1.11, though we're not comparing that to estimates. CFO also saying, based on the strength of this quarter, they will be raising their fiscal year, full year outlook, just based on the strength of this quarter. And as for guidance overall, it looks like basically in range for the current December quarter and full year for estimates. We see big old unch here for Electronic Arts, Morgan.
All right, Steve Kovac, thanks. Chris, I'm going to go back to you for reaction on Alphabet.
Thank you. Appreciate that. Yeah, so
Reddit reporting a surprise profit of 16 cents per share versus the loss of 7 cents per share that analysts had anticipated. We see shares are now up about 17% on that news. The company growing its revenue 68% from the year ago quarter to $348 million, beating estimates of $313 million. Daily active uniques of 97.2 million were just ahead of estimates, and average revenue per user of $3.58, beating estimates of $3.24. Reddit also guiding to fourth quarter revenue in a range of $385 million to $400 million. That's ahead of the consensus estimate of $358 million. Company also guiding to continued profitability, forecasting fourth quarter adjusted EBITDA between $110 million and $125 million. Shares now.
All right. We got Google starting pretty soon, and we'll get started with them. Real quick, Jason, anything you're trying to get out of this call that's important for you to hear?
I am personally always interested in the GCP commentary, right? So that is always going to be first and foremost. But I think, and maybe how advertisers are, what their sentiment is on advertisers right now on YouTube. Like, are they feeling like they're getting a lot of traction, or are they having a hard time selling kind of stuff?
Good afternoon.
All right, we're starting. Here we go.
2024 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. Q3 was another great quarter. The momentum across the company is extraordinary, as you've seen in recent product launches, and as you'll hear on the call today. Our commitment to innovation, as well as a long-term focus and investment in AI, are paying off and driving success for the company and for our customers. We are uniquely positioned to lead in the era of AI because of our differentiated full-stack approach to AI innovation, and we are now seeing this operate at scale. It has three components. First, a robust AI infrastructure that includes data centers, chips, and a global fiber network. Second, world-class research teams who are advancing our work with deep technical AI research and who are also building the models that power our efforts. And third, a broad global reach through products and platforms that touch billions of people and customers around the world, creating a virtuous cycle. Let me quickly touch on each of these. We continue to invest in state-of-the-art infrastructure to support our AI efforts, from the US to Thailand to Uruguay. We are also making bold clean energy investments, including the world's first corporate agreement to purchase nuclear energy from multiple small modular reactors, which will enable up to 500 megawatts of new 24/7 carbon-free power. We are also doing important work inside our data centers to drive efficiencies while making significant hardware and model improvements. For example, we shared that since we first began testing AI overviews, we have lowered machine costs per query significantly. In 18 months, we reduced costs by more than 90% for these queries through hardware, engineering, and technical breakthroughs, while doubling the size of our custom Gemini model. And of course, we use and offer our customers a range of AI accelerator options, including multiple classes of NVIDIA GPUs and our own custom-built TPUs. We are now on the 6th generation of TPUs, known as Trillium, and continue to drive efficiencies and better performance with them. Turning to research, our team at Google DeepMind continues to drive our leadership. Let me take a moment to congratulate Demis Hassabis and John Jumper on winning the Nobel Prize in Chemistry for their work on AlphaFold. This is an extraordinary achievement and underscores the incredible talent we have and how critical our world-leading research is to the modern AI revolution and to our future progress. Also, congratulations to Jeff Hinton, who spent over a decade here on winning the Nobel Prize in Physics. Our research teams also drive our industry-leading Gemini model capabilities, including long context understanding, multimodality, and agentive capabilities. By any measure, token volume, API calls, consumer usage, business adoption, usage of the Gemini models is in a period of dramatic growth. And our teams are actively working on performance improvements and new capabilities for our range of models. Stay tuned. And they're building out experiences where AI can see and reason about the world around you. Project Astra is a glimpse of that future. We are working to ship experiences like this as early as 2025. We then work to bring those advances to consumers and businesses. Today, all 7 of our products and platforms with more than 2 billion monthly users use Gemini models. That includes the latest product to surpass the 2 billion user milestone, Google Maps. Beyond Google's own platforms, following strong demand, we are making Gemini even more broadly available to developers. Today, we shared that Gemini is now available on GitHub Copilot, with more to come. To support our investments across these three pillars, we are organizing the company to operate with speed and agility. We recently moved the Gemini app team to Google DeepMind to speed up deployment of new models and streamline post-training work. This follows other structural changes that have unified teams in research, machine learning infrastructure, and our developer teams, as well as our security efforts and our platforms and devices team. This is all helping us move faster. For instance, it was a small dedicated team that built NotebookLM, an incredibly popular product that has so much promise. We're also using AI internally to improve our coding processes, which is boosting productivity and efficiency. Today, more than a quarter of all new code at Google is generated by AI, then reviewed and accepted by engineers. This helps our engineers do more and move faster. I'm energized by our progress and the opportunities ahead, and we continue to be laser-focused on building great products. Let me turn now to the quarterly highlights. In search, recent advancements, including AI overviews, Circle to Search, and new features in Lens are transforming the user experience, expanding what people can search for and how they search for it. This leads to users coming to search more often for more of their information needs, driving additional search queries. Just this week, AI Overview started rolling out to more than 100 new countries and territories. It will now reach more than 1 billion users on a monthly basis. We are seeing strong engagement, which is increasing overall search usage and user satisfaction. People are asking longer and more complex questions and exploring a wider range of websites. What's particularly exciting is that this growth actually increases over time as people learn that Google can answer more of their questions. The integration of ads within AI overviews is also performing well, helping people connect with businesses as they search. Circle to Search is now available on over 150 million Android devices, with people using it to shop, translate text, and learn more about the world around them. A third of the people who have tried Circle to Search now use it weekly, a testament to its helpfulness and potential. Meanwhile, Lens is now used for over 20 billion visual searches per month. Lens is one of the fastest growing query types we see on search because of its ability to answer complex multimodal questions and help in product discovery and shopping. For all these AI features, it's just the beginning, and you'll see a rapid pace of innovation and progress here. Next, Google Cloud. I'm very pleased with our growth. This business has real momentum, and the overall opportunity is increasing as customers embrace Gen AI. We generated Q3 revenues of $11.4 billion, up 35% over last year, with operating margins of 17%. Our technology leadership and AI portfolio are helping us attract new customers, win larger deals, and drive 30% deeper product adoption with existing customers. Customers are using our products in 5 different ways. First, our AI infrastructure, which we differentiate with leading performance driven by storage, compute, and software advances, as well as leading reliability and a leading number of accelerators. Using a combination of our TPUs and GPUs, LG AI Research reduced inference processing time for its multimodal model by more than 50% and operating costs by 72%. Second, our enterprise AI platform, Vertex, is used to build and customize the best foundation models from Google and the industry. Gemini API calls have grown nearly 14x in a 6-month period. When Snap was looking to power more innovative experiences within their My AI chatbot, they chose Gemini's strong multimodal capabilities. Since then, Snap saw over 2.5 times as much engagement with My AI in the United States. Third, customers use our AI platform together with our data platform, BigQuery, because we analyze multimodal data no matter where it is stored with ultra-low latency access to Gemini. This enables accurate real-time decision-making for customers like Hiscox, one of the flagship syndicates in Lloyd's of London, which reduced the time it took to code complex risks from days to minutes. These types of customer outcomes, which combine AI with data science, have led to 80% growth in BigQuery ML operations over a 6-month period. Fourth, our AI-powered cybersecurity solutions, Google Threat Intelligence and Security Operations, are helping customers like BBVA and Deloitte prevent, detect, and respond to cybersecurity threats much faster. We've seen customer adoption of our Mandiant-powered threat detection increase 4x over the last 6 quarters. Fifth, in Q3, we broadened our applications portfolio with the introduction of our new customer engagement suite. It's designed to improve the customer experience online and in mobile apps, as well as in call centers, retail stores, and more. A great example is Volkswagen of America, who's using this technology to power its new MyVW virtual assistant. In addition, the employee agents we delivered through Gemini for Google Workspace are getting superb reviews. 75% of daily users say it improves the quality of their work. Moving now to YouTube. For the first time ever, YouTube's combined ad and subscription revenue over the past 4 quarters has surpassed $50 billion. Together, YouTube TV, NFL Sunday Ticket, and YouTube Music Premium are driving subscription growth for the platform. And we are leaning into the living room experience with Multiview and a new option for creators to organize content into episodes and seasons, similar to traditional TV. At Made on YouTube, we announced that Google DeepMind's most capable model for video generation, Veo, is coming to YouTube Shorts to help creators later this year. Next, platforms and devices. Gemini's deep integration is improving Android. For example, Gemini Live lets you have free-flowing conversations with Gemini. People love it. It's available on Android, including Samsung Galaxy devices. We continue to work closely with them to deliver innovations across their newest devices, with much more to come. At Made by Google, we unveiled our latest Pixel 9 series of devices featuring advanced AI models, including Gemini Nano. We have seen strong demand for these devices, and they've already received multiple awards. Turning to other bets, I want to highlight Waymo, the biggest part of our portfolio. Waymo is now a clear technical leader within the autonomous vehicle industry and creating a growing commercial opportunity. Over the years, Waymo has been infusing cutting-edge AI into its work. Now, each week, Waymo is driving more than 1 million fully autonomous miles and serves over 150,000 paid rides. The first time any AV company has reached this kind of mainstream use. Through its expanded network and operations partnership with Uber in Austin and Atlanta, plus a new multi-year partnership with Hyundai, Waymo will bring fully autonomous driving to more people and places. By developing a universal driver, Waymo has multiple paths to market. And with its 6th-generation system, Waymo has significantly reduced unit costs without compromising safety. Before I close, I'm delighted to welcome our new CFO, Anat. We are thrilled to have her on board, and you will hear from her shortly. And as always, I want to express my gratitude to our employees worldwide. Your dedication and hard work have made this another exceptional quarter for Alphabet. Now, over to you, Philip.
Thanks, Sundar, and hello, everyone. I'll start with performance for the quarter and then describe the progress we're seeing across ads, YouTube, and partnerships, highlighting the impact AI is already having on our business. Google Services delivered revenues of $76.5 billion for the quarter, up 13% year-on-year. Search and other revenues grew 12% year-on-year, led by growth in the financial services vertical due to strength in insurance, followed by retail. YouTube ads revenues grew 12% year-on-year, driven by brand, closely followed by direct response. Network revenues were down 2% year-on-year. In subscriptions, platforms, and devices, year-on-year revenues were up 28%, driven by growth in subscriptions as well as the launch of our Made by Google devices in the third quarter. Before I double-click into ads, YouTube, and partnerships, a few comments on search. Whether using their voice to find answers on the go or opening their camera to explore the world around them, people are expanding how they ask questions in search, as well as the type of questions they ask. New behaviors create new opportunities to help us connect businesses and consumers via amazing commercial experiences. As Gen AI expands what's possible, we continue to see a significant opportunity in search. Let me take a minute to explain why. AI really supercharges search. Our new AI-powered features make searches more helpful, and we continue to see great feedback, particularly from younger users. For example, with Circle to Search, where we see a higher engagement from users aged 18 to 24. AI is expanding our ability to understand intent and connect it to our advertisers. This allows us to connect highly relevant users with the most helpful ad and deliver business impact to our customers. Let me share 2 new ad experiences we have rolled out alongside our popular AI-powered features in search. First, as you heard from Sundar, every month Lens is used for almost 20 billion visual searches, with 1 in 4 of these searches having commercial intent. In early October, we announced product search on Google Lens, and in testing this feature, we found that shoppers are more likely to engage with content in this new format. We're also seeing that people are turning to Lens more often to run complex multimodal queries, voicing a question or inputting text in addition to a visual. Given these new user behaviors, earlier this month, we announced the rollout of shopping ads above and alongside relevant Lens visual search results to help better connect consumers and businesses. Second, AI overviews, where we have now started showing search and shopping ads within the overview for mobile users in the US. As you remember, we've already been running ads above and below AI overviews. We're now seeing that people find ads directly within AI overviews helpful because they can quickly connect with relevant businesses, products, and services to take the next step at the exact moment they need. As I've said before, we believe AI will revolutionize every part of the marketing value chain. Let's start with creative. Advertisers now use our Gemini-powered tools to build and test a larger variety of relevant creatives at scale. Audi used our AI tools to generate multiple video, image, and text assets in different lengths and orientations out of existing long-form videos. It then fed the newly generated creatives into Demand Gen to drive reach, traffic, and booking to their driving experience. The campaign increased website visits by 80% and increased clicks by 2.7 times, delivering a lift in their sales. Last week, we updated image generation in Google Ads with our most advanced text-to-image model, Imagen 3, which we tuned using ads performance data from multiple industries to help customers produce high-quality imagery for their campaigns. Advertisers can now create even higher performing assets for PMax, Demand Gen, app, and display campaigns. Turning to media buying, AI-powered campaigns help advertisers get faster feedback on what creatives work where and redirect their media buying. Using Demand Gen, DoorDash tested a mix of image and video assets to drive more impact across Google and YouTube's visually immersive surfaces. They saw a 15 times higher conversion rate at a 50% more efficient cost per action when compared to video action campaigns alone. Last and most importantly, measurement. This quarter, we extended availability of our open source marketing mix model Meridian to more customers, helping to scale measurement of cross-channel budgets to drive better business outcomes. On YouTube, we remain focused on building a platform that enables creators to thrive and unlocking a whole new world of creativity with AI. Creators are at the heart of the YouTube ecosystem, and the content they are making is driving robust growth and watch time across the platform. We're also using AI to greatly improve recommendations on YouTube. Driven by Gemini, our large language models have a deeper understanding of video content and viewers' preferences. As a result, they can recommend more relevant, fresher, and personalized content to the viewer. Short-form creation continues to thrive on YouTube. Shorts monetization improved again this quarter, and we continued to significantly close the gap with in-stream video, particularly in the US and other more highly monetizing markets. Of all the channels uploading to YouTube each month, 70% are uploading shorts. And we recently announced a top requested feature, the ability to upload shorts up to 3 minutes long. Also, advertisers can now book first position on shorts blocks in close to 40 markets. We're unlocking more opportunities in the living room. Our momentum here continues as we maintain our status as the #1 streamer in the US, according to Nielsen. This is driven by the strength of our creators, such as Michelle Carr and Red and Link, who are increasingly crafting experiences designed specifically for the big screen. And it's paying off. The number of creators making the majority of their YouTube revenue on TV screens is up more than 30% year on year. YouTube is becoming a premier destination for sports watching. People come for the game and stay for the commentary and around the game content from creators like Evelyn Gonzalez, Adam W., and Brad Coleman. During the Olympics, content from Paris 2024 had over 12 billion views on YouTube. More than 850 million unique viewers watched over 40 billion minutes of content, with 35% on their TV screens. And recently, we kicked off our second season of NFL Sunday Ticket on YouTube TV, which continues to receive a positive reception from advertisers, our partners at the NFL, and fans. We have continued to invest in our product experience with improvements to multi-view and deeper integrations for fantasy football fans. Following up on my remarks from last quarter about Brandcast, we had a strong upfront performance with commitments up about 20% year on year. As always, let me wrap with the strong momentum we're seeing in partnerships. More and more of our partners are recognizing the breadth of our technologies and building solutions that leverage the very best of Google. For example, our recently announced strategic partnership with Vodafone Group spans Google Cloud, AI, Android, ads, and digital services. This multi-billion-dollar partnership will bring these technologies to more than 330 million customers across Europe and Africa. We're collaborating on more than 30 initiatives across 7 areas, including generative AI for consumers, a best-in-class TV platform, hardware, and cybersecurity. With that, a heartfelt thank you to Googlers everywhere for their extraordinary commitment, and to our customers and partners for their continued collaboration and trust. Anat, welcome to the team. It's great to have you with us. Over to you.
Thank you, Philip, and thanks, Sundar, for the words of welcome.
All right, so this is about to be another 10 minutes of boringness. I'm sorry, guys. This is what you got to go through for the Q&A. Real quick, Jason, check your Discord because I got to ask you a question there. But we got to get through these 10 minutes, guys, and then we'll get to Q&A.
Commentary on investment at the Alphabet level. We had another strong quarter in Q3 with robust momentum across the business. Consolidated revenue increased by 15% or 16% in constant currency. Search remained the largest contributor to revenue growth, followed by robust 35% growth in cloud. Total cost of revenue was $36.5 billion, up 10%. Tech was $13.7 billion, up 9%. We continue to see a revenue mix shift, with Google Search growing at double-digit levels, while network revenue, which have a much higher tech rate, declined. Other costs of revenue was $22.8 billion, up 11%, with the increase primarily driven by content acquisition costs, primarily for YouTube, an increase in depreciation associated with higher level of investment in our technical infrastructure, and higher hardware costs associated with the pull forward of our Made by Google launches from the fourth to the third quarter. Total operating expenses increased 5% to $23.3 billion. The increase was primarily driven by facilities-related charges as results of action were taken to further optimize our office space footprint globally, followed by depreciation, partially offset by a year-on-year decline in charges for legal and other matters. R&D investments increased by 11%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses increased 5%, primarily reflecting investment in advertising and promotional efforts related to the Made by Google launches, as well as for AI and Gemini. G&A expenses declined by 10%, primarily due to lower charges for legal and other matters. Operating income increased 34% to $28.5 billion, and operating margin increased to 32%. Net income increased 34% to $26.3 billion, and earnings per share increased 37% to $2.12. We're pleased with the progress we're making in re-engineering our cost structure, which is reflected in our operating margin expansion this quarter, while also continuing to invest in the business to bring innovation to consumers, creators, and enterprises. We delivered free cash flow of $17.6 billion for the third quarter and $55.8 billion for the trailing 12 months. Year-on-year free cash flow was negatively impacted by the following items. In 2023, we deferred cash tax payments from the second and third quarter to the fourth quarter. And in Q3 2024, we made a $3 billion cash payment related to the 2017 EC shopping fine. We ended the quarter with $93 billion in cash and marketable securities. Now turning to segment results. Google Services revenue increased 13% to $76.5 billion. Google Search and other advertising revenue increased by 12% to $49.4 billion. The robust performance of Search was broad-based across verticals, led by the financial services vertical due to strength in insurance, followed by retail. YouTube advertising revenue increased 12% to $8.9 billion, driven by brand, followed by direct response advertising. As Philip mentioned, we're seeing strong momentum in YouTube, including robust growth in watch time across the platform, and are excited about the new features and products we're bringing to creators. Network advertising revenue of $7.5 billion were down 2%. In the third quarter, the year-on-year growth in all our advertising revenue lines was impacted by the increase in strength in advertising revenue in Q3 of last year, in part from APAC-based retailers. Subscription platforms and devices revenue increased 28% to $10.7 billion, reflecting growth in subscription revenues, as well as the launch of our Made by Google devices in the third quarter. We continue to have significant growth in our subscription products, driven primarily by YouTube TV and YouTube Music Premium, as well as Google One, primarily due to increases in the number of paid subscribers. With regards to platforms, we're pleased with the performance in Play, primarily driven by an increase in buyers. Google Service operating income increased by 29% to $30.9 billion, and operating margin was 40%. Turning to the Google Cloud segment, which continued to deliver very strong results this quarter. Revenue increased by 35% to $11.4 billion in the third quarter, reflecting accelerated growth in GCP across AI infrastructure, generative AI solutions, and core GCP products. Once again, GCP grew at a rate that was higher than cloud overall. We also saw strong Google Workspace growth, primarily driven by increases in average revenue per seat. As you just heard from Sundar, the robust innovation and expanded AI offerings within our cloud business are allowing existing and new customers to realize measurable business benefits, including reduced cost, greater customer engagement, faster response time, and better revenue conversion. Google Cloud operating income increased to $1.9 billion, and operating margin increased to 17%. The operating margin expansion was driven by strong revenue performance across cloud AI products, core GCP, and Workspace, as well as ongoing efficiency initiatives. As to our other bets, for the third quarter, revenue were $388 million, and operating loss was $1.1 billion. I'll highlight just a couple of accomplishments in the quarter for Waymo and Wing. We're excited about the progress we're seeing in Waymo, as Sundar mentioned, and the increase in the number of paid rides. We're planning to continue to expand our geographic coverage and reach more customers in existing markets and new markets. Wing, our drone delivery company, recently passed the one-year anniversary of scaling its partnership with Walmart in the Dallas-Fort Worth area, now operating in 11 stores and serving 26 different cities and towns. Turning to Alphabet-level activities, the largest component of this line is our investment in AI research and development activities, which support all of Alphabet. There were two notable items that impacted the operating loss in Alphabet-level activities. First, a $607 million charge related to decisions we've made to further optimize our physical footprint and office space globally. And second, our ongoing investments in AI R&D, including the full core effect of the organizational changes we've made in May to move some additional AI teams from Google Services to Google DeepMind. With respect to CapEx, our reported CapEx in the third quarter was $13 billion, reflecting investment in our technical infrastructure, with the largest component being investment in servers, followed by data centers and networking equipment. Looking ahead, we expect quarterly CapEx in the fourth quarter to be at similar levels to Q3, keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx. Our expansion of data center capacity is expected to bring economic benefits to countries and communities where we are investing. In the third quarter alone, we made announcements of over $7 billion in planned data center investments, with nearly $6 billion of that in the U.S. In Q3, we also returned value to shareholders in the form of $15.3 billion in share repurchases and $2.5 billion in dividend payments. Overall, we returned a total of nearly $70 billion over the trailing 12 months to shareholders. As we look forward, we're working to balance our investments in AI and other growth areas with the cost discipline needed to fund those activities. As we think about the remainder of 2024, there are a couple of dynamics to consider. In terms of revenue, year-on-year growth in advertising revenue will continue to be impacted by the increasing strength in advertising revenue in the second half of 2023, in part from APAC-based retailers. And there will be a headwind to year-over-year growth in subscription platforms and devices revenue in the fourth quarter due to the pull forward of our Made by Google launches into the third quarter this year. In terms of expenses, we'll continue to see increases in depreciation and expenses associated with higher level of investment in our technical infrastructure, partially offset by a slight benefit from the cost revenue associated with our devices due to the pull forward of hardware launches into Q3. Now, before going into Q&A, as the new CFO, I would like to share a few thoughts on how I'm approaching and thinking through growth, cost structure, and capital allocation, and expect to hear more from me on these topics in the coming quarters. As I look at the business, I see opportunities for further growth propelled by AI and the underlying momentum across the business. You heard about some of these on the call today. I also believe that we are well positioned to deliver meaningful innovation, which will translate to revenue, given our strength in the core pillars that are required to succeed in AI at scale. Realizing those opportunities and great innovation in AI requires global reach, which we have through our products and platforms, as well as continued meaningful capital investment. And while we have a strong balance sheet to be able to support these investments, we will be looking for efficiencies so that we can fund innovation in priority areas. Sundar Ruth and our leadership team started important work to re-engineer our cost structure, including efforts such as optimizing our headcount growth, our physical footprint, improving the efficiencies of our technical infrastructure, and streamlining operations across the company through the use of AI. I plan to build on these efforts, but also evaluate where we might be able to accelerate work and where we might need to pivot to free up capital for more attractive opportunities. Thank you. Sundar, Philip, and I will now take your questions.
All right, here we go. Q&A. Wake up.
As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And our first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have a two-parter, Sundar. The first one, over the course of the last year plus, you sort of showcased a lot of different types of new Gen AI enabled search products to sort of reimagine the search experience. Can you help us hone in on one or two of these products that you're most excited about that you think over the next 2 to 3 years could really lead to more durable multi-year search growth once they scale? And then the second one, just as we're sort of thinking through constraints to how quickly they come out, what are sort of the key constraints that you see to really reimagining search and scaling it out across 2 to 3 billion people? Thanks.
Thanks, Brian. Great question. Look, it's been an extraordinary year of innovation. I mentioned in my remarks about Circle to Search, Lens, now with video search, approaching over 20 billion queries a month, and obviously AI overviews. And with each of these changes, we are definitely expanding what's possible in search. And it's been really heartening to see users adapt. They understand they can ask more queries, they come back more often. And so, and we have seen growth there. I think we are, while we've rolled out AI overviews to over 1 billion users, there is a lot more innovation there we are actively working on. So I expect search to continue to evolve significantly in 2025, both in the search product and in Gemini. And so, I think that's the opportunity ahead. I think we are in early days of what is a powerful new technology, and with it, I think we can do a lot more for our users, but at the same time underpin it on the foundational bedrock of quality and trust and user experience, which we have always done. So we are at 1 billion people. I don't necessarily see a constraint there. Obviously things like latency, cost per query, etc. But as you've seen us over the past 18 months make substantial progress. So we'll continue rolling it out more, and we'll keep evolving it. I think search, if I were to take a 12-month outlook, I think is going to continue to evolve and will be at the forefront of that innovation.
Our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Great, thanks for taking the question. Perhaps for Sundar and Anat, can you talk more about the infrastructure advantages and CapEx efficiencies you've generated from Google's own TPUs, and how does that influence your CapEx spending going forward relative to peers and other leading cloud service providers? Thanks.
Thanks, Doug. I'll take the first part, and Anat can give color on the CapEx spending part. Look, I think we are well positioned because in our AI infrastructure, we have a comprehensive solution set, right? We have all the leading AI accelerators, GPUs, TPUs, as well as CPUs, and we are investing in all of them. We have a wonderful partnership with NVIDIA. We are excited for the GB200s, and we'll be one of the first to provide it at scale. On the TPU front, I think we have not only are we in our 6th generation, I just spent some time with the teams on the roadmap ahead. Couldn't be more excited at the forward-looking roadmap, but all of it allows us to both plan ahead in the future and really drive an optimized architecture for it. And I think because of all this, both we can have best-in-class efficiency, not just for internal at Google, but what we can provide through cloud. And that's reflected in the growth we saw in our AI infrastructure and Gen AI services on top of it. So I'm pretty excited about how we are set up, and we'll continue executing there. And maybe Anat can give comments on the CapEx spending.
Yeah, sure. So let me provide a little more color on our capital investments, and certainly an important area in this time of investments in AI. As you saw in the quarter, we invested $13 billion in CapEx across the company. And as you think about it, it's divided into two categories. One is our technical infrastructure, and that's the majority of that $13 billion. And the other one goes into areas such as facilities, the bets, and other areas across the company. Within TI, we have investments in servers, which includes both TPUs and GPUs. And then the second categories are data centers and networking equipment. This quarter, approximately 60% of that investments in technical infrastructure went towards servers and about 40% towards data center and networking equipment. And as you think about them, we offer both GPUs and TPUs, both internally and to our customers. So we have choices and options based on what our customer needs and what our internal needs are. And as you think about the next quarter and going into next year, as I've mentioned in my prepared remarks, we will be investing in Q4 at approximately the same level of what we've invested in Q3, approximately $13 billion. And as we think into 2025, we do see an increase coming in 2025, and we will provide more color on that on the Q4 call. Likely not the same percent step up that we saw between 23 and 24, but additional increase.
The one other thing I would add on Doug, on your first part of the question on the TPUs is, if you look at the flash pricing we've been able to deliver externally, I think, and how much more attractive it is compared to other models of that capability, I think probably that gives a good sense of the efficiencies we can generate from our architecture, and we are doing the same that for internal use as well. The models for search, while they keep going up in capability, we've been able to really optimize them for the underlying architecture, and that's where we are seeing a lot of efficiencies as well.
Thank you.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you for taking the questions, and Anat, congrats on the new role and welcome to Alphabet. Sundar, maybe one for you on Waymo. What are the key learnings as Waymo has rolled out to additional cities in terms of consumer adoption of the product and how you think about go-to-market strategies for Waymo? And then maybe one for Philip, in terms of looking at YouTube trends by long form versus short form video or shorts, how are you seeing consumption versus monetization trends continue to evolve for YouTube as broken down maybe in that means? Thank you.
Thanks, Eric. On Waymo, obviously, it's been an exciting year, both in the Phoenix market and in San Francisco. We've definitely scaled, and particularly scaled paid rides, and definitely it surprised us on the positive in terms of how much consumers are loving the experience from a safety standpoint, privacy standpoint, reliability standpoint, etc. So I think all of that has been on the positive side, and obviously the product will continue to improve. So for us, we are mainly focused on each city as we go. The pace at which we can now do an additional city gets easier. So we are definitely accelerating that way. That's why you've seen us move into LA. We're also, striking partnerships in newer and unique ways, hence the Uber partnership and expansion to Austin and Atlanta. And we have more options where we are looking at the Driven by Waymo model with other network partners, fleet managers, etc. So it's an exciting moment, but we are still obviously being safety focused, but are looking to scale and testing out a variety of models, and which will help us plan ahead well for 2025 and beyond.
Yes, and to your question on YouTube Shorts, consumption versus monetization, maybe we start with the watch time. It continues to grow actually across YouTube with particular strength in Shorts and in the living room. Just to give you a number, over 70 billion YouTube Shorts are watched every day. On the monetization side, the monetization rate of Shorts relative to in-stream viewing is continuing to show a healthy rate of growth. The gap continues to narrow, particularly in the US. We also see it in other more highly monetizing markets. And we continue to work very closely with our advertisers. We're committed to providing them with very effective ways to reach the growing audience here. I talked about advertisers now being able to book first position on Shorts blocks. That's exciting. Shorts are also integrated into video reach campaigns, YouTube Select. So you're really giving brands the precise targeting options here. So yeah, we're pleased with the progress we're making here.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Hey, everybody. Thanks for taking questions. Congrats, Anat. Two, if that's okay. So first, Sundar, given the high stakes around native AI product usage, are there any milestones you can share around where Gemini usage is compared to the 250 million weekly active users that ChatGPT is seeing right now? And then the second question is, I'm sure this is something that you guys have been thinking about for a while, but it looks like the way that the Google versus DOJ search trial is going, there's a decent likelihood that the Apple ISA contract and some of the Android pre-install contracts are going to be voided out at some point in the future. So I guess the question is, what plans do we have in place to recapture some of the usage that might be going away in those search access points? How can we gain share on iOS queries if the Safari toolbar access point were to change? Thank you very much.
It's a big question. DOJ.
Thanks, Ross. Look, I think, obviously we are serving Gemini across a lot of touch points, including it's now, over 1 billion people are using it in search accessing. We are getting it across our products. The Gemini app itself has, very strong momentum on user growth. Our API volume, I commented on the Gemini APIs having gone up 14x in the past 6 months. So we are seeing growth across the board, and the Gemini integration into Google Assistant is going super well on Android. The user feedback is positive, so we are continuing to roll that out more. So I think you will see us. We are investing in the next generation of models, and as part of that, we are investing in scaling up the usage of the both directly to the models as well, both on the consumer and the developer side. So I think I'm pleased with the momentum there. On the second, on the legal, trials, obviously, I don't want to, it's not appropriate for me to speculate, given it's in the middle of ongoing litigation. But what I would say is, stepping back. Look, we've always, and even as the court acknowledged, clearly. We've reached a position of success because we've deeply innovated, and we are continuing to do so. People have chosen us, because they view it as the best product, be it consumers or partners. And we have a long track record of working hard to make sure our products are as easily available to users as possible across all platforms. So, all that approach and all the learnings over the years, I think will all be, will give us a strong foundation. First of all, we plan to vigorously defend, these cases, and some of the early proposals from the DOJ, et cetera, have been far-reaching, and we plan to, I think they could have unintended consequences, particularly to the dynamic tech sector and the American leadership there, and so we plan to engage very vigorously there. Thanks.
Thank you.
Your next question comes from Justin Post with BAML. Your line is now open.
Great, thank you. I wanted to ask a little bit more about AI overviews, maybe two parts. You mentioned you're seeing increasing queries or activity. Could you help us understand that for the billion users who have had access to the product, what you're seeing there? And then on the monetization side, is there a chance that AI overviews would help monetize some of the information queries that maybe you weren't making much monetization from with old formats? Thank you.
Thanks, Justin. Look, I think the main thing I would say is, as we have rolled out, we're obviously now scaling it out. We just rolled it out to 100 new countries and territories, and that's what will get us to 1 billion users. But amongst the users where we had already rolled out, we clearly see strong engagement. It's one of the most positive user satisfaction launches we have done in search, and it is increasing overall search usage. Like, people are asking more complex questions, different types of questions. They are exploring a wider range of websites, and what's particularly exciting is that this growth actually increases over time as people learn to adapt to that new behavior. So, so I'll stick to those comments, and I think to the second part of your question on the monetization side, I think Philip can answer more of that. Philip.
Yeah, so look, the transition here is working well, including for ads. As you know, we recently launched ads within AI overviews on mobile in the US. And this really builds on our previous rollout of ads above and below the AI overviews. So overall, for AI overviews, we see monetization at approximately the same rate, which gives us a really strong base on which we can innovate even more. And specifically to your question of monetizing queries where we weaken monetization potentially at the moment, yes, I can see that there is an opportunity for that.
Thank you.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have one for Sundar. Sundar, there was this perception, and it may have been false, that Alphabet was not as innovative on AI as they should. And it clearly shows that that was wrong. You're moving pretty quickly, rolling out new products. Could you talk a bit about how you may have changed
the org structure? I know you've combined some assets, but talk a bit about how you maybe rethought how you go to market with some of your innovation products, and maybe what's changed operationally as AI has picked up steam for you guys.
Thanks, Michael. Look, I definitely think it's an extraordinary opportunity, and I think the company, given the important moment, we had to gear up to build models from scratch that could be productionized at scale, on our architecture, and that's what the Gemini era was about. So there was a fixed cost of getting it all set up and getting the Gemini era underway. But now I think we are in much more of a virtuous cycle with a lot of velocity in the underlying models. We've had 2 generations of Gemini model. We are working on the 3rd generation, which is progressing well. And teams internally are now set up much better to consume the underlying model innovation and translate that into innovation within their products. So now, all the 7 products which have 2 billion users each have done their first versions of incorporating Gemini, and there is aggressive roadmap ahead for 2025. I mentioned earlier search alone. I think there's a lot more we can do, and we are also enabling smaller teams to ship newer experiences. And NotebookLM was the first instantiation of those types of efforts as well. Through it all, but then we had to do this when the company evolved from desktop to mobile. We are restructuring the company effectively. If you think of Google as a neural network, we are forming new synapses, which work much better to adapt to this moment. And I think that sets us up well for the year ahead. And we are bringing all of this innovation to the outside world through cloud as well. And so we are going to do that. And so that's an additional opportunity at this moment.
Thanks, Sundar. Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Okay, I'd like to ask 2 questions, please, to Anat. First, the margins at cloud have really started to ramp nicely. There are comps in the industry with still materially higher operating margins. I imagine that's a matter of scale and trying to catch up from a 3rd place position. But how do you think about the margin trends that you're seeing, and what's your level of confidence that those margins can kind of match up to other industry players that are doing closer to 30% margins? And then secondly, just across the board, when you think about the business that's running at 32% operating margins this last quarter, and you come in looking at this fresh, is it clear to you that there are a lot of kind of newfound cost efficiencies or ongoing cost efficiencies? Like, what do you see as the biggest opportunities to kind of take those margins and maybe over time take them materially higher? Thank you very much.
Thanks, Mark, for both of these questions. Let me start on the cloud margin. So certainly very pleased to see not just the top line growth rate, but the margin expansion to 17%. Really outstanding work by our cloud team to drive continued benefit to customers. And as you think about that margin expansion, really it's a few things. You've mentioned one of them. The first is scale. Obviously, as we scale the business, we have more opportunity for margin expansion. But the second, and shouldn't be underestimated, is the work the team has done to drive efficiencies across the cloud business. And we're seeing those come through, whether it was through headcount management or facilities management, other process efficiencies. We're seeing that go to the bottom line and driving the results you're seeing this quarter. Hard to obviously compare to any of our peers or competitors. It's a different business, but more to come. Now, the one thing to remember, and I've mentioned this in my prepared remark, this is an area that requires investment. And a lot of this investments, you think about servers, et cetera, is based on demand we're seeing from customers. So this will translate to revenue in the fairly short term. But that means there are headwinds associated with the annual run rate or costs associated with these investments, whether it's in the form of depreciation or just construction costs that are not capitalized, et cetera. So we'll continue to drive efficiency in the business to try and offset some of these. But this is how I'm thinking about the dynamics for cloud. Overall for the business, this is one of my key priorities, is to look across the organization to see what we can do in terms of driving further efficiencies. there's really good work that was done, started by Ruth, Sundar, and the rest of the lead team to re-engineer the cost base. But I think any organization can always push a little further. And I'll be looking at additional opportunities really across all the elements that I've mentioned on my prepared remarks. Think not just about the size of the organization, but mostly how we operate and how we run the business. And I think when you simplify the organization, Sundar just made a few comments on that. And when we use AI within our own processes and how we get work done, there are some efficiencies or opportunities for efficiencies. Now, all of that will go against substantial increases in capital investment, as I've mentioned, going into 2025. And again, I'll give more color when we are on the Q4 call. So hopefully we'll be able to drive efficiencies to work towards offsetting some or all of that increase.
Thank you very much.
Our next question comes from Ken Guralski with Wells Fargo. Your line is now open.
Thank you so much. Two, if I may. First, can you, just on search, why does it make sense to have two completely? Why doesn't it make sense to have two completely different search experiences? One, an agent-like answers engine, and then two, a links-based, more traditional search engine. You could innovate on both and let the consumer decide. Maybe think of it as the ultimate A/B test. So I'd be curious to get your thoughts there. And then the second, if you could touch a little bit on the consumer environment in 4Q. Perhaps nobody has a better view into the health of the consumer in multiple verticals. If you could talk a little bit about, you talked about tougher comps on the Asia e-commerce side, but any other trends you could point out, be around the election or fewer holiday days this year, that would be really helpful. Thank you.
And why don't I take the first part, and then Philip can give color on the consumer vertical trends. On the first part, look, in this moment, people are using a lot of buzzwords like answer engines and all that stuff. I mean, Google started answering questions about 10 years ago in our search product with featured snippets. So, look, I think ultimately you are serving users. User expectations are constantly evolving. And we work hard to stay a step ahead, anticipate and stay a step ahead. And this is why we've kind of really brought multimodality on the input side and the output side in search pretty natively. And so, we'll continue expanding innovations there. I do think having two surfaces for us allows us to experiment more, and there are, I view this moment as a moment in which there are new use cases which we will be able to do, which we couldn't have done before. And so having the flexibility, having product surfaces where we can move very, very fast, I think is actually helpful. And so we are embracing it and going to lean into this moment like we have done in the past year. And I think that'll play out well for users. Philip?
Yes, on the vertical trends, look, I called out search and other revenues being led by growth in the financial services due to improved economics in the insurance industry, followed by retail. But I think it's fair to say in general, we saw broad-based strength across all verticals, maybe specifically to election-related ad spend. We had a slight tailwind from election-related ad spend in the third quarter, which was a little bit more pronounced in YouTube ads.
And our last question comes from Stephen Ju with UBS. Your line is now open.
Okay, thank you so much. So, hi, Sundar. I think in two separate blog posts from Google Cloud, talking about the real-life use cases for Gen AI, I think you highlighted what was a pretty material increase in a number of companies that are starting to turn their, ideas into products. I think it was like a 80% increase in a 6-month period. And I think you guys also published some survey data saying that your customers are generating tangible ROI there. So, can you update us on what you're seeing in terms of sales cycles, perhaps accelerating, and, how much of the heavy lifting the cloud team may have to do to help your customers turn those ideas into reality more quickly? And Philip, I think one of the feedbacks that we're getting from advertisers is that while the initial use case for PMax for them was in search, they're starting to use it more and more for mid and upper funnel campaigns and budgets as well. So can you talk about whether that's an anecdote or something that you're already seeing perpetuate among all of your advertisers? Thank you.
You may on the cloud side, look, I think on the cloud side, look, I do think you hinted in your question itself. Definitely, customers are leaning in this moment. Wherever we have been working, we are definitely seeing real concrete proof points delivering real impact, right? And be it in their user experience, be it in the bottom line, etc. And so I gave a few examples on my remarks, and I think customers are getting savvier. We ourselves are going through a lot of learnings, both in deploying this within Google as an enterprise and bringing those learnings to our customers outside. And as we see common patterns across the breadth of sectors we serve in, I think we're bringing those learnings. So I would say, if anything, I think over time, I think organizations are beginning to understand more. They are leaning in. Our models are getting better. We are building more comprehensive solutions on top of it. So I think we are well set up for 2025, and I think there will be continued momentum in this area.
And on the PMax side, look, we continue to see success with PMax, and we see those success stories really from large advertisers, from agencies, from SMBs, across marketing objectives, across different verticals. It's a very cost-effective, and it really finds customers wherever they are across all the different Google channels. And with the introduction of Gemini, we added a lot new features to PMax. For example, to deliver more powerful performance, help advertisers scale, build high-quality creative assets, and so on. But going directly to your question on the funnel, also keep in mind we have a great product with Demand Gen that is all about inspiring consumers beyond the initial awareness and to take action. And we think Demand Gen is actually a very powerful tool to win in today's marketplace with marketers. And we can't wait to see actually what more value it will drive.
Thank you.
Thank you. And that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our fourth quarter 2024 call. Thank you and have a good evening.
Thank you,
All
everyone.
right, Google is done. We are done with the beginning of Big Tech earnings. First of all, Jason, thank you for being a member. He says, Amit DMs me all crazy stuff being a member. Also, thank you to Derek Wall for the 50 gifted again. Derek, we really appreciate it. And at this rate, everyone in the channel is going to become a member. So thank you, Derek, for the 50 gifted. Jason, raw takeaway from this call.
I mean, 35% is good. That's really good. I didn't hear. I think I missed it. It was just long drawn out, but like I missed the perplexity guidance. So that one, I think maybe backtrack a little bit on that. But the street likes it, man. That's all I can say. I mean, it's up. What are we up now? I had a 5%. That's decent, and I'm a price action guy initially, so I can have my own reaction or gut feeling about some of the earnings data, things like that, and that's nice. But like the market tells me what they really think, right? And so one thing that I'm noticing right now, again, when we have really good earnings, I'm telling you, we've had some actually very outsized moves to the upside. And I'm not yet seeing that. I think there was a lot built into this Google, earnings like move, if you will. It was almost a 7%. It was 6.7% implied move. That's what the street was actually pricing in. So we're sitting here at 5. I think tomorrow morning is going to be really important. If so after Tesla, maybe expectations are high, but here at 178, it's not bad. I would love to see some follow through in the morning. And I think that's really what's going to matter. It's SoFi today. We saw it just running early and then a quick pullback. I think if 178 holds, even if Google pops up a little bit, and maybe it does cross 180. Maybe we even see 185. But as long as it's holding this spot right here, I'd say around 178, then it looks at least constructive. At least constructive. I would have liked to seen a bigger outsized move. Obviously, I think anybody would have liked to see it, but what my read is so far on this earnings season is that when the market really likes the results, they are rewarding the companies for it. So I don't see that just yet. I see a good move. I see a solid move.
Would you buy Google post earnings? I would just put that in the chat. Was this enough for you to be like 22 times forward earnings?
I'm telling you, so the piece I was missing, the piece that they didn't really, is the Perplexity stuff, or like not, was it Perplexity? No, it's the AI, right? So they talked a lot about GCP. They talked decent enough about YouTube, but we didn't really hear, this is where we're going. We didn't hear the crazy excitement about what's next for their AI moves, if that makes sense, right? And here's what we're really expecting. So I think that's the one component that might have been missing. We heard about Waymo. Look, I'm sitting here listening to the call. I'm like, what were they really saying about AI? I remember hearing the Waymo. I remember hearing GCP. I remember hearing YouTube. Do you remember what they said about AI?
So I heard what they said. It was one of the second questions, and Sundar was a little kind of elongated on it. But essentially, he said that the search generative AI overviews include advertisements above and under, and this is in a beta stage that they're eventually going to roll out and make massive. So that was the first thing he said as a way to combat the kind of narrative that search is dead. Number two, he said Gemini has 2 billion monthly users, which is a big deal. That's not search revenue, but that is still some form of AI incorporated into the company. And then the last question the guy asked, I think from Evercore, was like, everyone says Google's not innovating in AI. What's your response to that? And that's when he brought up Notebook LM, which is like you put the
oh yeah, he did.
Yeah. But I agree with you. It wasn't memorable enough to the point
that highlighted, right? It's like, where is the excitement? I know it's Google. We don't to expect to get that from Google is unrealistic. That's fair. But you know, they always find a way to leave you wanting a little bit more. But look, this is decent price action. Had they, had their flamethrower outs, we probably would have been, even with poor performance, we probably would have been a little bit higher. But yeah, like I said, we'll see the commentary tomorrow. If there's follow through, that's going to be constructive for sure.
Yeah, they did say at the very end, elections were a tailwind for them, which is why Meta's up 2% right now, because Meta's probably going to crush on ads as well, which is great, dude. If we just want to keep this bull run alive in terms of making sure the momentum stays, we needed Google to crush. Like, regardless of if you own it or not, we needed Google to
I think this was a good performance for sure, right? She said we are increasing spend as well. We don't see that big move from NVIDIA, but yeah, I feel like we're on to the next, right? Of the big cloud providers, I feel like this was the smallest one, and so we get the bigger ones. I don't feel like this is the smallest one, but
it's the smallest out of the 3 main cloud guys. Yeah. So do you think they took away market share from Microsoft or Amazon, or you think the pie is just getting bigger?
So there was a question about margins, and I know that.
By the way, real quick, Roaring Kitty is out of Chewy apparently on a 13. I don't know if we care about that anymore, but
he was out a while ago.
He's done. All right, go ahead.
No, they were cheaper, significantly cheaper from a cloud perspective. So if they're done discounting or they're changing their models, I think it's just general scale and penetration into like the channel, if you will, if they can get into the channel. I think that costs them some pricing power, but I think there was the question about margins, and I would personally not be worried about it. Honestly, I could care less about Google's margins. As long as the growth was there, then I would know that they'd be able to bring those margins back later on.
I agree. And the fact that operating margins were up 4.5%, again, they didn't need to do that, but
I don't. Yeah, it would have been a bigger move here had they said like, okay, we are flat on operating margins, but up 40% on revenue.
Yeah.
Like a huge difference.
Agreed. Okay, cool. So that's the main story with Google. AMD looks like there's somewhat of a
fire right now. It does not. It looks bloody right now.
It looks like gaming was down and another part was down, but is that enough to take it down 8%? Like,
I mean, I don't think that. Are you in AMD for gaming?
no,
I mean,
exactly.
yeah. I mean, I don't know. It was that what you posted earlier. It's the 5 billion from 4.5 billion expectations. Look,
Which is good. It's just not NVIDIA.
it's not good. It's not good, right? NVIDIA's growing how much, right? So look at Google compared to. Sorry, that's my raw reaction. So I could be wrong, right? But no, like at least Google GCP, the smallest of the smalls, is up 30%, right? Like if she could say, I mean, I don't know. It would, NVIDIA's growing how much? I think that we have to know that AMD is so far behind NVIDIA. NVIDIA probably can't even see them in the rearview mirror, basically. So
I think that's fair. Overall, I mean, earnings were not bad. You had Google. I know AMD is down, but still decent numbers. Enovix crushed. Reddit.
Look at that chart. That's just like a.
Yeah, it's sad, dude.
But I think, hey, it's still at 150, right? To be fair, I think it still keeps the storyline, but this is a story stock, right? I think you have to know that it is a story stock. So, maybe it grows into the story one day. Not
Also,
today.
if you're buying AMD over NVIDIA, the question is just like, what do they have that the market is under, that is discounting, that NVIDIA doesn't have? And I don't know what the answer to that question is.
I mean,
I don't know.
It's not like what they have CPUs.
Yeah, and if you're buying
Right.
for valuation, it's like AMD is more expensive than NVIDIA.
Right.
So it's not like, because the growth is just not as strong. Reddit, any reaction to this one going up 20%?
Yeah, I think this is typical like new IPOs, if you will, right? Reddit has only reported twice so far since they've been public. So I think this is good. Again, we're still in kind of like that lockup period for Reddit, and the street is whenever you have a new stock like that, it's really hard for analysts and the market to really define like what should we expect. So this is the third quarter, I believe, we've seen from Reddit. So the first few are typically, they can be pretty volatile. So again, I think this is going to depend on how this gets digested. I don't know what this puts Reddit at from a valuation perspective, but I think it is important to say, hey, look, there are things that are getting repriced. There are stocks like our Rubrik. Do we have Sam? Is Sam on here? Yeah. Like Rubrik today, who just had a massive move, finally, bouncing out of its IPO trading range, and
yeah, they're up 7%. Yeah.
Yeah, it's a big growth company, right? It's expensive, don't get me wrong, but like it's been overlooked since it released, right? Since it came public, it's been like, in my mind, extremely overlooked as a growth stock. Like people just don't talk about it. But here we are, just about 6 months in. This is interesting to see.
Also, Amazon is up another 2% after hours because of Google, dude. Wow.
Is it?
Now, this did happen last time, and then Amazon fell. So, I mean, I guess we got to wait for their results. But
yeah, so some of this stuff, if you're long into earnings, this is where we get these pre-earnings moves, right? So, like if you're long into earnings, the setup here on an Amazon and a Meta is a little rough in terms of like the technical setup. I think running into earnings too far, too fast might put you more into a flat position post earnings. So, and I just posted something earlier, like there were 100 and something, how many companies reported tonight? 170, 192 companies, Amit, report tonight, wow. Right? In the market. Tomorrow, do you know how many report tomorrow?
I don't.
303.
Goodness.
And the day after that, 221. So, so far, and this is what I was talking about, the setup, so far, I just pulled what's reported after hours today, and I'm looking at like 90% are having undersized moved tonight, right? And so if a lot of these end up moving tomorrow ahead of their reports, I think the setup is tough for them to continue to exceed beyond their expected moves. That makes sense. And that's all my option trader family out there, right? So people that are looking at stuff, when you get a big move like this, especially before you get we call it an IV crush, it's probably better just to take all of that down, maybe 90% of it down, because you may not, like some of these moves after Tesla, I mean, biggest move in a decade. I didn't, by the way, guys, I did not see that.
Can we talk about that? What was your reaction?
So I don't know if it was on this stream or not. I was like, 10% was the average move, right? And we know that the options were implying a 7% move. So we already knew that they were slightly underpriced. So I knew that was there. We talked about like where it would bounce, and it was to the penny, right? But a 20% move was not in the statistical cards whatsoever.
200 billion of market cap.
Yeah, it was not in the statistical cards. But this is what I'm talking about, right? This is what I'm saying. Like when a company has earnings beat so far, they're rewarded. And so we're not seeing that quite yet on Google. Again, it's early, right? After hours markets are thinly traded. So we really have to see what happens tomorrow. But, as we get in there, if some of these companies were set up to have an outsized move, well, now after like an Amazon or a Meta running after hours, even if they continue to hold that and then beat like heavily and even exceed expectations tomorrow, they might still continue, but maybe not as much as the market's pricing in at the moment.
Speaking of Tesla, I think they just released a robotaxi commercial. Yeah, here it is.
A couple of people asking. I saw someone ask earlier about my calendar spread. So first of all, the calendar is green. Even though the short call is deep in the money, it's green. So Tesla, here's an example. So when Tesla had a 20% move, that is a situation where there was no volatility crush. So volatility is still extremely high on Tesla. I do expect that to start coming in. But for the calendar, for my 225 calendar, I don't want to see it over 260 for very long. I might just close it. But if it does pull back a little bit as the focus moves to these other Mag 7 names, I think that would, if I can get that out around 7-ish, I'll be happy. But
dude, the big winners was anyone who bought that 230 call slightly out of the money, and they're up 2,000%. Like that's incredible.
Yeah. I mean, it's a tough one, right? But like it was underpriced for sure.
So this robotaxi looks pretty damn cool.
AZ,
look at that thing, dude. It's sexy.
No, I do like that. I like it. No back window. And I was thinking, why isn't there a back window? Are they going to have a back window? I was like, wait, they don't need to have a back window. I don't know about the wheels though. Those hubcaps.
The wheels kind of look like they're toys.
Yeah.
Right?
Yeah. And that one line across looks a little Lucid-esque to me on the headlight. But
do you own a Tesla at all? Do you drive a Tesla?
No, I don't. Are you going to get one?
Yeah, I put my order in last night, dude. I'm getting.
Did you really?
Yeah, I'm gonna get it. Get it. It'll be a Model Y. It'll be dope. Okay,
you guys
cool.
have a lot of questions here. I see a lot of questions about trades and stuff. Can I tell? So if you guys go to my page, Amit, there's I'm doing a webinar tomorrow night. It's free. Yes, you guys want to learn about trading options for earnings through earnings? I did this one last Sunday, and it was we had like 500 people jump in like within a couple hours, and we had to basically close it off. So I'm not going to close this one off. It's a follow-up free webinar.
So people can join and like literally just ask you questions throughout the webinar and just listen to you talk.
No. So I have a system that I've traded for years, many years. It's a systematic approach to trading options through earnings. So I don't know if you've ever done this before, and it's not like, hey, this guy's going to teach us how to YOLO calls and puts. That is not what this is.
That's what I want to sign up for. I don't want no conservative calendar spread bullshit.
I'm sorry, man. I'm sorry. But there's no catch here. But it's a free webinar. I just feel like it's good in general for like the community. Honestly, we used to charge like $500 for this one course. But teach you to fish for life. Literally. But how do you go through 300 companies tomorrow and handpick the very best trades? That's exactly what this is within a matter of minutes. But anyways, you'll learn a lot about options, pricing model, a lot about like volatility, things like that. Again, it's free. We'll probably go long. And it's a system. So there are materials that you have to be there for to get. But anyways,
that link is in the chat, guys. You can sign up for it right there. It's free and get access to at least trying to pick.
Let me make sure you guys don't. Actually, you know what? You can, if you go through I felt like I was going to get screwed last time because I only have 500 seats.
It's on
available.
Zoom, right? That's what you use, Zoom?
Yeah, but my license only gives me 500. And okay, so we're at 210 right now. So you're okay if you get in. If you get in today, you'll be fine. But if we start going like well over 500, it's going to be rough. But yeah, over 200, and yeah, people stay pretty much the whole time. It will blow your mind actually. But anyways.
Okay, can you give me your thoughts on SoFi today? What did we get from SoFi?
I'm long SoFi. Did you see? I saw it in the morning. I was like, oh God, I've seen this before.
Can you pull up the chart? Can we do some TA on SoFi?
Yeah, sure. Let me.
Because it was a good quarter. It was just, and it did have a decent recovery throughout the end of the day as well, I felt.
Yeah, actually. So in the past, it's been worse, right? It's been significantly worse.
Yes.
So, all right, I'm sharing now. You have to pull it up. So this is SoFi in the pre-market. We had this look, and I think I posted literally right here, and I'm like, I've seen this look before. So you get this move, and it's looking like we want to lock in a lower high, and then all of a sudden, boom, this one candle shows up, and at that point, you basically know that this is a foregone conclusion. And then it goes off your screen. So let me find a prior. So let's drop down to a better. So like here, same story, right? And I think the best thing to do is like compare to what's going on, right? Sometimes we'll get a little bit of recovery at the end. Did we get that today?
Yes.
So yeah, a little bit. So it's always about digestion. So if we get this little recovery and a press up tomorrow, but here's what's important. Do we want to have my trading hat on or my investing hat?
Let's do investing.
Okay. So investing this is good, right? As long as in general. So here's where we are. So on SoFi, it's been this whole thing. So 750, we're probably in around there. This can come back, and honestly, this can chill. Really, I think it's a lot about rates too. So take a look at what's going on in the rates, like the rate market at this very moment.
There's a 99.9% chance, or 98.9%, that we get a cut in November. So we're getting one more cut for sure.
But that doesn't matter, right? Because SoFi, it matters, but it doesn't matter because what they're talking about is that the government is cutting their yields, right? But SoFi's, they're different, right? And so the market, so the Fed controls the bonds and the T-notes, right? But they don't control the corporate yields and
right.
Yeah, and like private loans, things like that. They have nothing to do with that, quite frankly. And then and they actually don't even have anything to do with pricing in the market itself. This is where we're going to be. But the market can overrule, if that makes sense. The market can say, well, I hear what you're saying, but I don't really care, and this is what I'm going to do. And that's exactly what you're seeing right now. At the same time, the market has a tendency to overshoot. But
do you like buying at 1040 or 970 was the real dip?
I feel like the yields are topping out personally. I feel like any day they're going to start coming right back down.
And that's bullish for stocks, obviously.
Yeah, that's bullish for stocks. I would see Confluence. If you watch the dollar, the DXY, that's the dollar. It's at a pretty key level. So Confluence, I'd like to see the dollar come back down. And then, and that would also, if yields come down, that would also pull the dollar down just a little bit.
What level do you want on the dollar? It's at 104 right now. Is there a level?
Just under 104. So here's the Dixie. DXY. Why does this not have my, let me.
And guys, we'll talk about Robinhood to end out the show today because we got a big earnings tomorrow. So we'll talk about that.
Oh man, big one. So here's where we are. So 104.64 right here. This is, if I were to color this as overhead supply, this is what I think it is. And you pull this back. Sorry, I'm losing my voice. We've been on so many webinars lately, man. This level, literally right here, we're on it. So right here, right now, this is where I'd like to see the dollar top out. I think that's fine. On, I think it's the 10-year. So that'd be TNX is the 10-year yield. Same story. So this is the 10-year yield. Exactly same story. I would like to see this top out right here. I think this is kind of comfortable, I believe, for the market in general. It can go a little bit more, but check this out. It can go a little bit higher if I want to be super specific. It can pop up here, but I think that it's going to run into this overhead, let's call it prevailing downtrend. And right here at this pivot, I don't see it going much higher at all.
So you think 4.3 is where it tops out, 4.4?
So yields, it can get a little choppy, right? But I want to see it start to top out. This can go to 4.5, believe it or not, 4.6. And at 4.6, I think, it'd be a freak out mode. What's happening? And then that would be like a blow off top to me. And we would see something like this. If we hold over 4.3, cool, we can hit this. And then we'll see this eventually come back down.
Yeah.
That's my technical take. I'm not Drunken Miller. I'm not long bonds or anything or long yield, like whatever his bet is. But I think that this is the technical bounce is near completion here, which to your point or your question, is this bullish in general? I do think it is. So
the other thing for SoFi is if Trump wins, financials are going to explode. So
yeah. So while earnings can be somewhat market dependent, while companies are reporting, now that SoFi's earnings report is out of the way, I think it becomes more market dependent. If that makes sense. Yeah. So just like Google will become more market dependent. Here's $10 on SoFi. This is that initial IPO price, give or take. This $10.10 would be ultra bullish to hold. Ultra bullish.
$10.10 would be bullish to hold.
Yeah, that's a crazy bullish hold. But I don't know that we're not. So look at this bounce. I just dropped it down. That's a very bullish hold, but I think that's a little bit of wishful thinking, quite frankly. So in reality, this same level here, and I'm long SoFi here. If I saw it at like $9, again, I would start looking at how is this going to be reacting. And if it begins to be strong again, let's say it comes back to 907, and then I wouldn't immediately go in. Literally bought today at 1010. Yeah. See, like I'm already in, right? And I know Amit, you're already in. Yeah. So the question is really for us, if we're already in at the lows, do we want to
average up
here now? And I think that's the type of mentality that you need to be thinking at as an investor, right? So if you're someone that's looking to begin now investing in SoFi, think about us. Think about me and Amit. At what point do we get interested again? And quite frankly,
there's nothing on the earnings that would make us that interested. That's
we might not get really interested until like 850, right? Yeah. And so like if we did see 850 again, we would probably be interested again. If that makes sense. And
I would probably double the options position I have at 850.
Bingo, right? So I think you see something like that, then that becomes like one of those moments where like, okay, the bottom is flushed out, and then we can. It just feels really bad for just a minute, and then boom, it's like it was a nightmare, right? It didn't even happen. So and you wake up and you're back to 10. But if something like that does happen, just know that 1010 is going to be that overhead resistance. So we want to see it continue higher through near term. We do eventually want to see like if what was I going to do? So like these prior tops, this is the big pullback, and this is kind of like that moment. Same thing. Where like if someone here So you have this big earnings pop and then a big old drawdown that's basically all the way back to where it was. And this is, if we saw something like this, that's what I'm talking about. You might just get that really quick, like, you know, it feels bad, but all of a sudden it's like, it was a nightmare. Didn't even happen. And here's one where I would say, like, I don't think we're really in that situation. Where was the one I was looking for? Is this something like this? If we get to tomorrow, so like if this is the pre-market move, if we make yet another slightly lower high, that's a little cautionary from a trading perspective, because you want to see the next high be higher than, you want to see the next high breach $12, which would be great, but that's where it hit in the pre-market. So whatever the next high is, I do want to see it breach that. Otherwise, we know that this goes into a bit of a holding pattern.
Okay, so I have to go vote, and the polls close at 8 p.m. today. I can do early voting, but no. We got to do two things. Quickly, can we do a minute of TA on Bitcoin? And then I want to talk Robinhood for like 2 minutes, and then we can be out.
You mean you don't want to do Ethereum?
Dude, no one gives a fuck about Ethereum. Like, you're going to make money off Ethereum.
What's Solana? Dude, ETHU was up 10% today. Over 10%.
Great. I just don't think there's a use case for Ethereum, but like, it's great. It's pumping. That's great. I'm happy for you.
I mean,
Bitcoin. This is Big Daddy Bitcoin.
Question: why do you invest in stocks?
To make money.
Okay, cool. So we're on the same page.
No, I'm happy Ethereum's pumping for you. I just,
yeah, all right.
Don't care. Like Bitcoin is the one I think everyone really cares about.
Yeah, so I think that I said this before. I think we're well on our way, right? We've had this chart up for God knows how long. I can take the very last ones, these last tops, give or take, and I'm just kind of swagging because this is, not our old chart, but good enough. So I take this top, this becomes our trend, and you'll see it right, boop, there. See that? Kaboom. And we've established that we have a series of higher highs and higher lows in this near-term trend. Did you like my sound effect, by the way?
I did. Boop.
By
the way, Ethereum is not 2,000 from all-time highs. Ethereum's at 4,000 is all-time highs. Bitcoin is close.
No, it's more than that.
No, it's like 4,800 roundabout.
Yeah, but 7,000 would be good. 7,500. So anyway,
target on ETH 7,500.
So here we are, all-time high, right here. Call this whatever. This is what we're running into in this exact extension right here. So this is what I'm saying. I think that we can get a little bit of a press potentially, but these tops right now are getting to be a little bit blow off toppy, and then it might look really ugly over the weekend. But as long as we're holding this channel, right, we are good to go. That makes sense. We talked about buying in here as the accumulation phase. We are extending the upside of this existing channel. It's a channel up. It's an uptrend.
Did you expect in the past 48 hours for this pump to happen? Or
yeah, it's right here.
I mean, when it went to 70, I was like, I hope it keeps 70. Now we're at 72.
Like 2 weeks ago, do you remember, or what was it on your stream? Someone was like, what's your highest conviction long? And it was Coinbase at 160.
Yeah. Pretty much copied it,
Did you notice? So what's weird too is if you haven't noticed, MSTR is doing this thing again where it's underperforming Bitcoin.
Well,
So
but I mean, over the past 2 weeks, it massively outperformed, right?
No.
Yes, it did.
No.
Yes, it did. I think you got this one wrong, sir. Look at MicroStrategy the past month. It's way outperforming Bitcoin.
Oh, yeah. Yeah. So, yes, you're talking longer term. So I'm talking shorter term. So what my point was, MicroStrategy actually front ran the whole move.
That's my
MicroStrategy
point. Yeah, exactly.
Yeah, was breaking out. And so I think this dynamic is interesting. So MicroStrategy was breaking out. This does not look like the Bitcoin chart, right? Not even kind of. MicroStrategy was breaking out here. This is basically where Bitcoin is right now. I think Bitcoin is basically right about here right now. MicroStrategy is here, way up here. So I think we could get this pullback like that on Bitcoin, and then we get this boom, boom, right? Same kind of thing. But where we are today, MicroStrategy is down on the day because it's been front running Bitcoin. So it's just a weird scenario.
But I think it's okay that it's kind of just taking a breather after front running the whole move, right? Like that, it's supposed to be.
No, I think that's the point, right? It front ran the move. So things like BITX or Beto, or there's the team over at Tuttle Capital does something with Rex shares. So they have like T-Rex, was it BIT? Anyways, there's like leveraged actual Bitcoin now. Those are interesting. It's the MSTR is like, dude, it's been a great Ponzi, and it's working.
It's a hell of a Ponzi.
It is. So here's the shelf, right? So I think it has to hold like 71s, give or take. If it doesn't, then I think it could come back and retest this 69K level, this 2021 all-time high. But you really, at the end of the day, you really want to see it holding this 2021 high. We have extended a big old explosion through. This is that pullback retest. Boom, we're in the breakout. So it can go a little bit higher. But this weekend or whenever, we want to see these retests in this area, 70K area, holds. And as long as that's happening, and we're just seeing that series of higher highs and higher lows, this looks good. So let's do it this way. If we're going to take the lows and that kind of channel up, yeah, it would be press up, and it's still in this area right here between 72 and 69.
So
let this do its thing. It's cooking, man. It's working. You're gonna hit, but you should already be in, and now you're just letting it. The trade work for you.
All right, so that brings us to the final topic. What do you think? What do you think of Hood tomorrow?
Oh, dude.
I think it'll be
the same thing. Do you still? Are you?
My last buy was 27.30. So.
Are you? Whoa.
Yeah.
Are you still in options?
Yep.
Okay, I'm not.
So, it's a bigger one for me than you. You're not. You have stock, so it's whatever for you.
Yeah. Here, let me do this. So Robinhood.
Usually, the past couple, you'll pull up the math right now, but the past couple earnings have been a little flat in terms of
3%.
Yeah, 3. So I'm expecting
a 13%,
maybe a little bit of a pump.
14.
I'm expecting probably like a down 5% just because it's run up a lot. But I don't think that matters. I mean, look, either it's gonna be like Reddit where they grow like crazy and they're up 20%. Because Reddit was up 60% going into earnings. Now they're up another 20%, something like that. Or it's a kind of quarter, but the street's still bullish, so they don't care too much.
Yeah, so average move is 8%. Let me just.
There is a world where they grow 45% and the street's just like, holy shit. Holy shit, bro. I think it's very possible. I'm hedging. I think closer to 38 to 40% is the real growth, which is still amazing. But I did the numbers, and 45% is not unreasonable.
No, I believe you. I believe you. So I'm just doing this right now. So I'm going to take 3 point. This is the system, by the way. 3.1, 13, 14.3, 7.2, 6.4. It's just a little data entry. And then we're going to see here, Hood is here. Implied move for Robinhood is tomorrow, right?
Yeah.
I'm very exciting. 2.88. Ooh.
Percent or dollars, up or down?
Dude, dollars, slightly overpriced, but not much at all. I think you're going to be okay.
So it's either 26 or 30, essentially.
Yeah. So they 70% of the time they do not have an outsized move. This,
which I like. I like that it chills on her.
Yeah.
It's not.
Yeah. So this right here is what's more important for the traders. I think that they're more appropriately priced, dude. This is not over. I think you're going to be okay. I'm not in it because I like I said, I really wanted that like way over the top. Like I wanted that $5 debit spread for like 50 cents, and I'm just not getting it. I really wanted it. But anyways.
I think the Bitcoin run is also helping Hood as well. I think there's a lot. Oh, what was your reaction on the election betting?
Oh, I like the price of the stock reaction for sure. Yeah, I don't know how to get it though.
Dude, you just gotta log into. You have an on your phone, right?
Yeah.
Do you use your Robinhood account a lot? Or it's
No.
just okay? So you got to open it up, maybe update it if it's not there. It should be right below.
I use it, but like it's not like
your main. Yeah.
I use it for screenshots and stuff, and I'll throw a little bit here and there. But like it's not like my primary trading. Where do I go?
You go right below, like you open it up, you log in.
I
see it, right? US.
No.
Bro, it's U.S. presidential election right underneath your buying power.
There's nothing underneath my
Okay,
buying power.
okay, so they haven't rolled it out to you yet. It's probably because you're not an active user. They were like, "Fuck, Jason, we don't need to get to it." But it's no, they're rolling it out over the past 24 hours, so it should be soon. A lot of people that got it, they didn't even have to update the app; it just pops up. I got it like
I have to update it.
I got it late last night, so I didn't even get it early, so it was pretty late.
Okay, it's updated. Yeah, I'm more. The thing is, I think you're probably right. If you get that 5% move, I'm very similar. We're like, I don't care, right? What happens if they have an outsized move? Great, but I'm more interested in a possible dip buying opportunity than anything else to continue to. I just love this company, dude. I mean, I'm not.
I'm trying to think what creates the dip, and I don't think
it's because there's a lot of this built in on this new app, the Legend app, and it's good. It's a great start. It's not going to do it, right? It's not going to do it, and they don't have the but it is a road to do it, but they don't have the revenue yet. So the market might start pricing in all this SPX and futures revenue, but it's not even live yet. Right, so you can't even trade it really. Like I don't believe. Can you trade it?
They wouldn't price that in for Q3. They might price that in for Q4.
Market? No, the market would price it in today.
No, dude, they announced it in October. How could the market price it in for Q3?
Because it's like this is a future market's like a 2-year forward-looking vehicle, right? Like it's gonna be like, oh, this is hype. It's a story. I don't want Robinhood to turn into a story stock. Is what I'm saying.
Yeah, but I think the market knows the feature's not live. They can't price in this type of growth when it's not even out yet.
Yeah, if we see Robinhood 33, I mean,
that'll be fun.
Yeah, I'm in. Right. I'll just be a little sad I didn't get to get more in.
Yeah, I mean, dude, after the run we've had over the past couple of days, it didn't feel bad buying shares at 26 or 27. You just wanted more shares.
I know. I just didn't even care. It was. I think it was like 26 the other day. I was like, I don't even care. I don't even care. I'm just buying more. But
the other big thing is, dude, they bought back stock. I don't know how much, but
yeah,
their EPS should beat massively if they bought back their stock. The question is, how much do they buy back? And
oh yeah, I did buy. Like my price, my entries are.
Jason's like, I bought 20,000 shares at 26 bucks.
I completely violated my cost basis. I gave no fucks, right, at all. But
they're executing, bro. They're actually.
Why do I care? Honestly, when I look back at some of my stuff, I remember like there were times where I violating my initial cost basis kept me out of so many things.
Same.
Because like I had the greatest cost basis, and I'm thinking, as an investor. Screw that, dude. Screw that. Delete that off your screen. Don't even look at it. It's not about that, right? It's not about where the stock is coming from. Forget about it. I think GE too. I had GE like pre all splits at like in the 40s. The thing is up so much, but it was part of like, I got the entry. I had it all planned out. It was perfect. Absolute like precision execution. But I should have just like looked at it and be like, this is actually happening all the way. It's going all the way.
On $100,000 is more than 300% on like $10, right?
Yeah.
So,
yeah. Not like it wasn't a small position, but it was like when I look around the stock market, I'm like, is there a better stock that I want to be in? Right. I might have other stocks, right? But if you're like, what other stock would I rather be in right here, right now? I mean,
it's fair
for the next couple years at least.
I did a podcast with Gali from Hyperchange yesterday, and I was like, yeah, I'm thinking of diversifying as well. And one thing he told me that I also think is important, he's like, dude, if you found two winners like Palantir and Hood, You just get more of them. You don't have to worry about trying to get 7 positions.
Too much diversification is not good. It's not good for sure. I did go through that too. Like a lot of diversification, being balanced, is depending on your age, right? And how much you're managing. You don't want to be too diversified. There's things like if I have a 40-year outlook and I have $10 million and I'm a very passive investor and I'm not going to pay attention to the markets, weathering whatever storm, sure. Right. And there are certain things at certain times, like I just talked about GE. That's not a shiny company, right? Like it's an industrial that had been beaten up like crazy. Or I bought like Newmont Mining at like 20 something dollars. Not even that long ago. Those are diversifications, but at the same time, they're opportunistic diversifications.
Right.
That makes sense. When you have some kind of turnaround story, if you can have a thesis for that stock at that point in time, ideally turnaround story, then sure, and then you can add it to your portfolio. But yeah, I think over the years you'll probably end up diversifying just naturally. Right, because you'll find certain winners in different categories. I don't think it's that big of a deal. It is, but not like depending on where you are. Sorry.
All right. I gotta let you go. Thank you everybody for being here. Jason's Twitter is in the chat. Please check him out. If you have any questions, also just tweet at him. He responds to a ton of tweets.
We talked about the mastermind. Appreciate you guys signing up. You did have some people sign up from the chat. We're closing that registration. We're almost full. So 10/31, that's about 2 days from now. Hit us up if you can. DM me. I have a couple, we're going to decommission all codes. And then we're going to kick off the second week of November or second Monday of November. And that is like 10 traders, like crazy systems, full blown college education trading. Is literally the biggest mastermind I've seen ever.
You're gonna be working, bro. Next 2 months, you're gonna be working.
Oh yeah, it's huge. The lineup is crazy, but I underpriced. It's underpriced. Unfortunately, I did accident. We didn't do it, but can I talk about a giveaway?
You have a giveaway?
So we're gonna teach you how to trade in the mastermind, and then we're gonna give you $100,000 to trade with.
You're giving actually a real 100,000.
It's a eval challenge account, so it's for because we don't usually do a lot of futures trading, but we are having some futures.
But is it a real 100,000 or no?
Yeah, and so it's an eval challenge account. So I paid for it, the stuff, and then we give you access to $100,000 account to trade with. The catch, I guess, is you can't lose more than I think like $35,000 or $4,000.
Wow!
But the first $12,000 you make is yours, and the profit split is 90% you take home, and then the prop firm keeps 10%, assuming that you don't have a drawdown. So you can't lose money, but hey, you're going to get a course. We're going to teach you how to trade, and then we're going to arm you with it. So nobody's really doing that. That's a big deal to me. But anyways.
And how many winners are there? One winner of this $100,000?
One. What do you mean winner?
Of the giveaway of the $100,000 account.
No, I'm giving it to everybody. I'm telling you, like you're laughing. I already paid for this to happen. Like we're just like, screw it. Right. Like, screw it. This is the deal. We want to help the community. It's not just me. It's a lot of people, but like,
so hold on. So just to get this straight, you sign up for the course, you learn everything that you say.
I have to go. I only purchased so many. So if too many people sign up, we can't, it would be,
okay, but hold on. The point is, you sign up for the course, you get the information from you over 6 weeks of training, and then at the end of 6 weeks, you get $100,000 account that you essentially
it's called an eval challenge account, right? It's with a firm that they will give you $100,000 account to trade with. It's not your 100,000,
right?
But you now have access. Like if I gave you custody access of $100,000 account, cool. Now you have access to trade my $100,000 account. If you lose more than I think it's like 3,500, then you blow the account and I revoke access. Does that make sense?
That's decent. You got to stop loss of 3,500 basically.
Yeah, 3,500. And no overnight trading. It's a futures account, right? So futures, Bitcoin, gold, silver, crude, whatever, NASDAQ, SPY, Russell. And
basically using the skill sets in the thing in the course.
That's the deal.
Yeah.
Right.
That makes sense.
And if you blow that, then you come in and you teach them how. But there's no cost to them, right? It's just like we're doing it. We're doing it because we want to do it. So whatever. I don't care what they say. We're doing it. But
all right. If you guys are interested, check out Jason's Twitter. You'll get more details in his Twitter, and then you can check it out there as well.
Yeah.
That makes a lot of sense. That's cool, dude. I didn't know you guys were doing
They
that.
do not do that. Yeah, no, it wasn't something we want to talk about. Like, it wasn't like, hey, you know, it was like, it was hard to get this to happen. So like, we finally got it to happen, and I was like, okay, cool.
But see, this is why I also think you're a lot different from a lot of these other financial people who have courses. It's like, not only are you actually doing mentorship and working with people, but you care about them winning. So after the course, it's not like, all right, I taught you stuff, go out. You're like, no, I'm giving you the money now to at least try. And if you lose it,
at least try. And if you don't, you know, that's cool. But like, at least try. And you know, if not, it's all good. And then all the stuff, we have 10, so it's 10 traders, including you, sir, which I'm very happy to have you on, giving basically their best systems. So when I say system, it's like, it's usually like, this is if this, then that, kind of like remove your emotional key out of like element out of it, especially when it comes to trading, day trading, swing trading, options, obviously, you know, futures now, no crypto, we're not doing crypto, but yeah. Anyways, it's cool. I'm excited. It's a big one. We're basically full, but yeah.
Yeah, DM Jason for the details on his Twitter. Hit him up, and we'll see if we can get you in there.
Cool.
All right. Good
all right,
shit.
guys.
Thank you, Jason. I'll see you tomorrow. We'll talk later.
All right. Adios.
Bye. All right, folks. That is pretty much it. Again, you can DM Jason if you want to check that out. I had no idea that he's doing this like 100,000 trading challenge. Again, I make no money from this course. I don't have any affiliate code, nothing on it. He really wanted to pay me. I said, no, I don't do that stuff. So I trust Jason. He's one of the most authentic people I know. And if he's actually building something to help people, that like he's legit. He knows what the fuck he's doing. B, he's made enough money in his life where this is not his full-time thing, right? So he doesn't need to scam money out of people. He's actually interested in helping people learn. But one of the cool things is if you get access to a trading account after the course and you can actually practice, and you know, if you blow it up to 3,500, you don't have to pay back the 3,500. If you make 12,000, you keep it. I didn't know he was doing that deal. So that's a cool thing. If you're actually interested in that challenge, hit him up, DM him, and maybe you can get a chance to get into that world. And again, just to clarify, don't make any money from this. Don't have an affiliate code. Not involved in it at all, but he comes on the channel every Tuesday and gives us a lot of advice. So happy to help and support him. Okay, so that is done with big tech earnings for Google. Tomorrow morning, we also have a ton of stuff to look at in the pre-markets. I might start the morning open early because we have a lot of shit tomorrow. Again, as Jason said, there's like 500 companies reporting this week. Eli Lilly tomorrow, Caterpillar, Wingstop, Fiverr, Kraft Heinz, UBS. A lot of big companies in the morning. And then after the close, we have Robinhood, Meta, Microsoft, Starbucks, Coinbase, MicroStrategy, Carvana, Roku, Etsy, Twilio, Lemonade, eBay. And it seems like those are the big ones. Obviously, the stream tomorrow will be about Robinhood, DoorDash as well. But we'll, once we get the Robinhood results, I think we have an hour until their call. So we'll get all these companies. Obviously, Meta, Microsoft are important ones. And then I think at 5 p.m. we have the Robinhood call. And we will stream that as well. Okay, that's it. Earnings, not too bad. Google crushed it. I think hopefully the street will be excited for it. Up 5.52%. AMD didn't crush it. Stocks down 7%. It is what it is with AMD. You kind of have to have a long-term vision with them. The growth is just not like NVIDIA. But the big question today was, will one of the first companies in big tech outside of Tesla shit the bed or really put up some amazing growth? And Google put up some pretty amazing growth at 35%. On cloud. So there you go, up 5.5% on Google. I'm going to go do my civic duty and vote. My mom just texted me that there's this early voting place like 2 minutes from our house and there's like no line. I was going to go on November 5th. I'd rather go right now and get the job done. So I'm going to go do what people died in this country for me to do, which is have the right to vote. So I'll be going to vote. And we'll be back tomorrow on the Market Open. Big interview coming out on Thursday. Recorded the podcast. That's why I'm wearing this shirt today. I think you guys will like it. It'll be a fun podcast, and that'll be out Thursday night at 7 p.m. All right. Thank you, everybody. We'll be live tomorrow, 8:45 a.m. on the Market Open. Did I ever get a costume? No. I have 1 day left, and I need to get a Halloween costume like ASAP. So maybe tomorrow. find a way to get a costume, but I need to get a costume and I still don't know what to wear. So if you guys have any suggestions, DM me on Twitter. I want it to be funny, and I don't really know what's really funny. Like the Robin Hood costume is cool, but like it's not like it doesn't hit. It doesn't like, it needs to be funny, and I haven't found anything super funny yet. So I know I'm naturally funny, but I need a costume that's funny as well. So we got to figure that out. All right, thank you everybody. 8:45 a.m. tomorrow, big day on earnings, and then we got Robin Hood after the bell tomorrow. Bye everyone, have a good one. If I can end the stream. My mouse is being so weird, dude. It's like I can barely, the touchpad is being so weird. All right, how do I end the stream? Oh no, we're here forever. We're just, yo, literally, I can't move it. It's like not moving. All right, we're just gonna be here forever. Yo, literally, it's not moving, dude. I'm like, all right, here it is. All right, now it's gonna be ending. 3, 2, 1. Bye, everybody.